We all have seen the numbers. Overall, I think the numbers are pretty impressive. If especially if you look from Street's point of view, in terms of revenue, overall the growth in commercial in US, and I'll touch upon this a little later. That what does it mean in terms of US growth moving forward in terms of global one. And we were discussing for last a few days that can they reach around 400 million or 380 million. I mean, we know that it was very ambitious, and we were pushing quite a lot our expectations. But to be fair, I think they came close to it. I think the call overall went smooth. So let me just take two numbers first. The first was the revenue growth, which was like 49% compared to what we had in the Q2 2020, which is pretty impressive by any standards. I mean, I think there's one comparison that has been drawn in past and will be drawn moving forward is the revenue growth numbers that Snow draws. I mean, and to be honest, I mean the revenue that Snow is fetching is superlative. It's very impressive. However, we need to be cognizant also that Snow is in a category of data warehouse only. When you are in the big data OS system, there are several categories you actually cater for: your infrastructure, your legacy systems, your smart business analytics layer where all the SaaS solution sits, and your data layer. So the total addressable market for which Palantir is going is actually quite large compared to what Snow is going on. Also, the way Snow operates, because it matches and merges a lot of existing systems, and it can be deployed with minimum disruptions. I mean, the deployment is pretty straightforward and simple at times. It allows you to handle some low hanging fruits. While working with Palantir, it's different. You really need to change how an organization works. The change management requirement is high, and that's why it's a very sticky product. So in the starting, it takes a while for an organization to actually commit and deploy it. You cannot work. That's not the idea that Palantir is deployed. That you're still working like you used to do before. And in the last 1 year, we have seen it very clearly that how in the crisis mode Palantir shines the most. So I think this is one difference we all have to keep in mind and be a bit patient with it. Second number, which I think is more important, is the commercial revenue that is shown a growth in of 90% in US. So there are two things here: that US growth is strong, but what is happening on the global scale? So definitely, the global growth is not at 90% and far lower than this. Now, guys, uh, my view is following on this. See, I already discussed that in a solution like Palantir, you need a very strong change management. You need to change like how an organization work. Now, US in terms of a tech arena is still flexible compared to large and legacy organizations who are working in different parts of the world. What does it mean is that they normally go with companies which has been localized enough in their country, and they have a sense of familiarity with them. So Palantir is still in the early phase of that. Normally, what will happen is that Palantir will increase their local presence in a lot of these countries. They will hire a lot of local people who have existing relationship in these industries, and with time, they should do it. It has happened with every company, every tech company, that they start their growth in US, and eventually the world catch up with them as they start getting more and more localization. So the growth in US is technically a sign that moving forward, we should see increased growth in the category of different countries also. It will be homogeneous, it will be heterogeneous. I think that will depend. Another one which is very important is that with Palantir, when we invest in Palantir, we are making a bet on how the world will look like tomorrow. So for example, like what Alex and Sham has said, that in 5 years down the line, the enterprise procurement will be very different. You will buy one finished product, and that product will help you in running the ERP across or providing you a big OS for enterprise end to end. Another approach which is dominant in industry today is building the bespoke solutions. That means you decide what kind of partners you are going to select in, and with these partners you try and merge and to work to figure out the bespoke solution. It works in the first phase. It looks pretty nice, and there are reasons for that. Guys, one thing in the digital transition as well as in energy transition is that organizations most of the time running ahead of them. And I know this from my experience with working on large digital transition, energy transition projects with my previous employer in BCG. So normally what happens is the moment an organization declare that they are going to run a transition or transformation product, people in the organization overnight become digital experts as well as, I mean, know what to do. Now, in these kind of organization, the power play dictates in a way that, okay, everybody has to come along. So what happens that you get several uncoordinated digital projects starting a lot of places in the organization, which is very different. And at this particular time, what happens is you engage a lot of small partners and some POCs, pilots done, but integration become a big trouble. Palantir solution is not deployed in this way. And that's why in this particular phase or do it yourself phase, I think Palantir is not a partner with a lot of companies up there. However, in the also the research have shown that almost 87% of do-it-yourself AI ML solutions or big data solutions fail, so they never manage to scale up beyond POC and pilot. So there's a lot of business happening on this side, but relative results are not up to the mark. So this is where Palantir should make a gain. So basically, it's a view of the world that 5 years down the line, are we going to have a world where big ERP is a mix and mashup of these bespoke ERP solutions, or companies will opt more and more towards solutions which are complete. The another thing which will dictate inside it is, see, when an organization adopts data and digital transformation, it's exciting time. Everyone wants to be the part of it. And there is a distraction that means a lot of people forget that their core work is not digital and data, their core work is still the service and the products and the widgets they have promised to their customers. And I think as we move through with quarters and annual results, people who are affected in organizations about it, I think they will get back to focus. So companies will realize more and more that they need these tools to deliver a certain task or results they have promised. It cannot become a distraction in itself. They cannot put a lot of organization resources into it along with the capital. So that should favor in terms of Palantir as a one big OS ERP solutions moving forward. So at this particular time, I personally think that the commercial rate across the commercial space outside, especially in US, is not that high. And the reason for that is their presence is still very concentrated in US, and with time, they are moving in other countries. Of course, a couple of countries presence for some time now. For example, Japan, and so yeah, I think that is something which is different. But we need to see it more and more present. So the way it starts is, for example, you're working in a company in US and you are successful. So that company deploy the same solutions in its subsidiaries in the other part of the world. So for example, BP deployed Palantir to develop Alex, which is their digital twin in North Sea. So hopefully, I mean, we don't know the further details, but that's pretty much the same thing. They should deploy it in other part of worlds also. So this is how it starts radiating from one of the core markets. So it should improve. I think overall revenue booking was pretty impressive actually. I personally feel, and having seen that how revenue is booked over the process and goes through with every layer, I think probably they had chance to book slightly higher revenue, but they probably have sandbagged here because they were already beating all the estimates going forward. The number of customers they have increased is amazing, and one of the most important thing, and I always like it, and this is one of my key indicators looking Palantir is, are their existing customers spending more? And we saw that their top 20 customers have actually increased their spending by almost like 3 million annually. So that's a quite a important one. Also, I saw this first time they actually mentioned anything about the deals of the order of 1 million. Last year when they got IPO, they said that we are looking for clients who are $5 million and above annually. We also know then they later on came with Palantir Unlock, Foundry for builders. But we never actually learned that have they done any $1 million deal. And they said that now in the Q2 2021, they did 62 deals of at least 1 million, which is indicative the results of these three programs. They haven't given the breakout, like what's coming for how much, but whatever initiatives they have started since Q1 2021, at least we are seeing some early fruits out of it. Some of these deals are still pretty big, 5 million plus, 30 of them, and 21 of them is 10 million plus. That means we are also seeing that their client is realizing the alpha value they can create, and they're also realizing the value that getting a one end-to-end solution has its own benefit, especially when the company is in crisis. They also updated their guidelines looking forward, and yeah, I mean, in my personal view, I think they're still sandbagging a lot. They are consistently delivering like this growth of like 49%, 50% for last 2-3 quarters. I don't see any reason personally that why it should stop. They are in this. They are in. So they are also converting a lot of capex to opex. That means their revenues per quarter should become consistent. By the capex to opex I mean is, like, if you remember, when Palantir was started their commercial business, in the starting they used to take a big chunk of their fees because they were investing in the infrastructure and other things. So there a lot of fees comes as a part of their capex in the start, and then they charge as they go along with it. But as we saw in the last few months, that they are moving more towards that try first and pay later, which is telling that means the upfront cost or upfront money that is coming from customers is getting less, and they are paying as they are using it. So in terms of revenue, that means we should see consistent revenue from existing services and existing clients, and the new contracts and new use cases should add on top. So in short, the meaning is that we should see consistent growth in revenue if they keep realizing these values. Let me take a pause here, guys, and let me ask my two close friends like Dom and Jacob to come on the stage and share their views. Okay, Dom, would you like to go first?
Sure, sure. Thank you. And thank you for hosting this. I was very excited about all of the results. I was more excited about the transparency of some of the use cases, the new customer add-ons. You heard them name drop John Deere, Bass Pro. For people who don't understand the architecture of Foundry and what it truly can offer in any industry, I think that articulates it when you name retail stores and other things, that this software is the core operating system for businesses. And if you look at the investor deck, one of the slides about the alpha that they were able to generate with customers who are just starting out and basing their business off of Foundry, opposed to trying to migrate all of their legacy IT investments and data into Foundry. Not that it's not going to eventually drive that alpha and it won't, grow and get better, but it says here, day zero companies are leapfrogging legacy IT investments and building on Foundry as the modern operating system. And I think you hit it so beautifully of this. IT procurement is changing, right? Technology procurement and what systems you're running to modernize your business is changing. And you look at all these different companies are trying to build an ecosystem of products or provide modular approach to their products where you get them on the core product and then you bolt on all these different add-ons and grow their business. It's the world I work in. I work for VMware and work in cybersecurity sales. And everyone wants to have a platform, right? Because platforms are sticky. If I have you using the platform and you're getting value out of that platform, why wouldn't you buy other products of that platform to adopt? And so what we saw through that investor presentation, the deck, they are doing a very good job of this, and it shows with their current top customers and the additional revenue that they're spending. It's because they're getting more value out of the use cases. And that's what I really wanted to pay attention to. The numbers are great and we expect execution on the numbers. But what I wanted to see was, are we seeing a huge customer growth, especially in commercial with Foundry, which they highlighted the 90% growth in the US? I definitely agree with you that a lot of times the world will model what US does from a tech perspective and the growth and how they implement things. So I do think they will get into other countries and they will continue to partner with Japan and see more adoption there. And then the other piece, building on Foundry as the modern operating system. And I think you hit it so beautifully of this. IT procurement is changing, right? Technology procurement and what systems you're running to modernize your business is changing. And you look at all these different companies are trying to build an ecosystem of products or provide modular approach to their products where you get them on the core product and then you bolt on all these different add-ons and grow their business. It's the world I work in. I work for VMware and work in cybersecurity sales. And everyone wants to have a platform, right? Because platforms are sticky. If I have you using the platform and you're getting value out of that platform, why wouldn't you buy other products of that platform to adopt? And so what we saw through that investor presentation, the deck, they are doing a very good job of this, and it shows with their current top customers and the additional revenue that they're spending. It's because they're getting more value out of the use cases. And that's what I really wanted to pay attention to. The numbers are great and we expect execution on the numbers. But what I wanted to see was, are we seeing a huge customer growth, especially in commercial with Foundry, which they highlighted the 90% growth in the US? I definitely agree with you that a lot of times the world will model what the U.S. does from a tech perspective and the growth and how they implement things. So I do think they will get into other countries and they will continue to partner with Japan and see more adoption there. And then the other piece was it was really nice to see their contract value 175% year over year growth to 925 million. Just a year ago, it was 337 million. So that was really exciting, and they're highlighting the different vehicles. And so there's not any other software that I've seen on the market that is so applicable at being at the core business model for the company. And regardless if you're retail, you're the government, if you're autonomous driving, you're taking data, which we know is growing exponentially and is going to continue. You can't argue that, but you can make that data usable and actually show return on investment consistently. That is how you keep customers for long periods of time, and they expand their spend with you. And I think they're doing a fabulous job of execution on this. I'll pass it to Jacob.
Hey, Jacob, please come on.
Hey, can you hear me?
Yes, Jacob, we can hear you.
Hey, thanks for having me on here. Yeah, I'm particularly impressed by the by how distributed their customers are in terms of revenue, and as you mentioned, the mentioning the $1 million deals. I was estimating around the same revenue. I had 172 million, but not nearly as many customers. So I was estimating 162 customers this quarter, and they came in at 169. So that if you break down the revenue per customer on a quarterly basis, they do it annually, and I think it's 8.1 million is what they had for this past year. But you can see a decrease if you boil it down to a quarterly basis. So this quarter, they came in at 2.2 million in revenue per customer, compared to last quarter of 2.29, and then the quarter prior 2.3. So they're actually, if you boil that down, they're really decreasing their revenue per customer on a quarterly basis, which means that it's much more distributed, really broadening their customer base and not so reliant on just a few. And I think that's easing a lot of analyst concerns. One kind of looming question that I think a lot of people had was, are the SPACs kind of forcing partnerships? And that I believe was the first or second question from one of the analysts on the call. How many of those new customers were from the deals that they've struck? And still, that was only seven customers of the 20. So that's still 13, even if you don't count the SPACs, 13 new customers outside of those partnerships, compared to 11 the quarter prior. So, I mean, even if there is concern about any of those SPAC partnerships, what they're doing already is gonna outpace that dramatically. They just can't invest in that many partnerships going forward compared to how many they're going to acquire. But yeah, I think that's, from what I've seen so far and kind of picked apart, I'm most impressed by how many new customers they have. 11 last quarter, 20 this quarter. Yeah, that's huge growth, and it really prevents or it addresses one of the major concerns that Wall Street has. I'll turn it back over to you.
Hey, thanks, Jacob. I think that's excellent, man. I totally agree with you on this part. Is because they're adding more customers, and we are seeing that their customers are actually spending more money with them. So ideally, there should be two-layered revenue that comes with it. And guys, I mean, like, as we are moving forward, I think one thing we saw that the value of Palantir is more when we are seeing that they are disruption. And their disruptions naturally comes in two ways. The first is the disruption that we saw last year that came like a macro disruption in terms of COVID that happened. But then the disruption happens in the industry when how the things are done. For example, now things changing in big data or energy transition. that also forces companies to react faster. That means they have to shortcut or they have to reduce the time they are looking to make a decision. And these are exactly the situations where companies decide to take more top-down kind of a decision. I shared it in past that, I mean, like, I'm just trying to share a couple of mental framework I have to review Palantir, that you always think in terms of like breadth and depth. So breadth is, that means once a tool is deployed in an organization, how many people and how many value chain nodes it touches. So for example, if somebody using Microsoft Word in an organization, I think everyone uses it. The depth is that a total value a person create in that company or that value node, how much of that value is actually created from that tool. So when we look at a solution like Palantir, we see that it has a very high breadth because once deployed, it touches directly, indirectly, literally everyone in the company. And in a lot of cases, it creates an alpha value. So we see a tool that has the capability for high breadth and high impact. And there are actually very few tools like this which can actually exist in health. So it will have a high impact in most of the cases. One thing we always have to be careful also. I think this is something we as a Palantir investors we cannot neglect, and we always see that the negative narration that comes with Palantir. I mean, there is nothing to hide here. People have called Palantir the black box. Uh, Personally, I mean, all of us we discuss internally. We disagree with that kind of definition. I mean, what they are doing is super clear. The clients have the testimonials. They have numbers to back it up. They are handling some of the largest data sets that are present on the globe. But yeah, I mean that narration from Wall Street is not going to go away, and they will always pitch it whenever there's a cloud of confusion around it. We have also seen some of very respected analysts and investors go online and they simply say that with Palantir they have issue on data privacy. It's funny at times because probably that's the only company that exists which has ever called or discussion on the data privacy or to build civil liberty framework in the data. But guys, I mean, irrespective of it, these narrations are not going to get away. And yeah, I think for time being, we just have to live with it when it happens. I have
No,
another
I would
speaker.
agree.
Yeah.
I was just going to say, Sakin, I was watching as they opened the bell today, and on CNBC they said that it's a black box and that they only had one page of earnings. And sure enough, the guy had the whole presentation there and just was missing it on his desk. But I don't think that a lot of analysts are doing enough DD and really taking the time to understand the business. I know that on the call they said a lot of investors don't understand the business, and Sankar said. I don't know why you don't understand the business because we're pretty clear on what we do and we have the customer use cases and everything else. Let me tell you, here are some of the successful things that we're doing to change the world. And then you see the partnerships, right? So for anyone to say it's a black box and this and that, we're seeing the use cases demonstrated throughout their presentation, their commercials, marketing. You also look at the partnership now that they're providing at scale with Data Robot just started. They also have been working with Accenture, the largest consulting business out there in the world for Accenture Federal. I would love to see them partner with their commercial side. They also have partnerships with IBM, and IBM having 2,500 salespeople pushing this message of really helping innovate in how businesses run their ERP with Palantir. So as they make more partnerships, and they also have partnerships with AWS too, I believe that the understanding of this platform and product and the value they offer will continue to be understood by customers. But maybe it's because they didn't go the traditional route when they IPO'd that Wall Street maybe has it out for them. But I agree with you. You're gonna have to endure this as well as the stock-based compensation. Everyone wanted to hit that on the head, and the reality is those options had to be exercised. So if you're a long-term investor, it's a good buying opportunity, but you are going to have to endure a lot of volatility for a while. I would agree.
I agree, Dom. I think very well said. Kevin, would you like to share your views as well? Hi, Kevin. I brought you as a speaker. Let me know if you could hear me and you would like to share your views. Okay. In the meantime, Kevin connects and share. Let me just share a couple of other things, guys. I mean, see, you don't have to take our words. What do we think about the black box, or what do we think about the street? I think the simple way where you try to litmus test it by yourself is, and make your own view about it is, see, when you look these numbers, so numbers like we are seeing today, these numbers are always the lagging indicators. That means you should see the signs first and the numbers later. So if you are driven all the time by numbers and not seeing the signs, probably most of the time when you go for investment, probably some of the best opportunities are missed. Now, when I'm looking for technology understanding, I'm not going to look for Mr. Jim Cramer or people who are sitting on CNBC. Actually, have you ever seen anybody going on CNBC or any mainstream media channel and asking Jim, tell me what strategy to follow? They don't ask because people who are sitting on these channels, I mean, most of them, they talk about strategy, they read about strategy, but probably have never executed or made strategy in their real life. People go on finance channel to tell Jim, this is what we are going to do, and Jim is a spokesperson for them to actually tell it to its media what he thinks on the spot for it. Okay, I think it goes without saying that people at any group, like for example, even in my group and my jobs, you always work in a group, you always work in a cult and clubs. Like we have a community of volunteer investors, and most of us think alike. So it works everywhere. So the question for you is all the time is that if a company is going to become a monopoly or a trillion-dollar company or a very large company, it will not happen overnight. And if it is not going to happen overnight, what are the simple signs you are going to look at? So we take some examples of companies like AWS, Apple, Microsoft, Facebook, Tesla. You see that there was one thing, few things were common, that these companies have always a constant buzz. They have a very inspiring leader along with them. They were generating better and number as the time was going on up there. You also see that the narration about these companies was not very clear in the media. I mean, I still remember when Facebook was doing IPO, everybody was saying, I mean, how these guys are going to make money. I mean, we don't know about it. Nowadays, I think last quarter they generated like $50 billion of revenue or something like that. So the thing is, when you are part of investment like Palantir, and there is no guarantee that Palantir will become that company. I mean, things can go wrong also. The geopolitical narrative itself can kill a lot of revenue, so we have to be aware of it. But we need to see these signs. As long as signs are consistent, that's a kind of a definition that this company is likely to go better than where it is today. Okay, I mean, how do I see it moving forward? I was watching this tweet from Puru, and he was sharing some of the analyst estimates about Snowflake, and they were showing like by the 2030, it should have nearly $20 billion in revenue. I mean, of course, like everybody else, I do modeling, and to me, that scenario seemed a bit extreme. But yeah, I mean, it's an estimate. I mean, it's not about right or wrong. It's model. Every model has a purpose. But when I was looking at that model, I said, if this is a scenario where Snowflake is going to get a $20 billion of revenue, then the market is far bigger than what I'm anticipating. If that is the case, that means my estimate for Palantirs are also wrong. So either the market is not that big, or it's far bigger than a lot of us have calculated. Analysts, and I mean, I've worked close to analyst community several times. In analyst community, there is always a bias factor, and the factor is people try to work out the numbers which are largely acceptable. That means if today I feel that Palantir will have a revenue of $20 billion by 2025, I will not say it. I will say what company is saying 4 billion. I'm bullish. Let me say something around 6 billion, 7 billion. If it goes even bigger than that, people will still remember me because I gave the highest estimate. So when these numbers come in terms of future, I think we need to take these numbers as the solid milestone, but as the indicative direction that this analyst or this person is think that company has a higher upside than what a lot of other people are saying. Let's see what the logic look like for that. We also have to remember that these are not consumable which you buy without thinking. If a company is going to buy Palantir and is going to invest $30 to $40 million on it, I mean, they want performance and they want alpha performance. At the end of the day, are you seeing that? Are their clients coming forward and saying, yes, Palantir changed the game for us? And this is what we have seen in a lot of their clients like Airbus, Ferrari, Ring Gear. I mean, these are the kind of companies they come and they say, yes, since we adopted Palantir, the game has changed for us. Okay. One of the funny thing which I always say and find it, and guys, please back me up. I mean, if you agree with it, is people who don't like Palantir, they are the first in the line to say how strong it is. I mean, I remember I was on a Twitter Spaces, and the host of the Twitter Spaces says, I don't think they have a good software. Their software sucks. And the reason their software sucks is because LAPD use their software. So, I mean, if we are coming from a technical community, the question for us is, does LAPD has a record of using bad software, or you are against the software because you are don't agree what LAPD is doing in terms of principle. So it's if LAPD is doing something wrong, or if ICE is doing something wrong, or if any government or legislative or guy with a fiduciary duty is doing something wrong, it is the problem in the system. And if you start blaming a software company for that, if Alex Karp or Shyam Sundar is doing something unethical, okay, then yes, blame them. But blaming the problem of society or a problem of a particular system on a company, to me, I don't think it's fair. It's more political. And I mean, yeah, we can have different views about it. I personally endorse and agree with the Palantir stand that few people sitting on an island cannot decide what is going to be the right and what is going to be the wrong, or how that is going to behave for rest of the world. They have their role in the community to share the dialogue, and as everyone else. So this freedom has to go. This is a larger debate, and everyone has to participate in it. Now, I agree and I stand by it. And this is one of the reason I love the company. But yeah, I mean, it doesn't mean that you have to buy it, but the risk is gonna stay. And as we have seen in last 1 year, that some of these risks and some of these narrations can go a long way. So if you are looking to be invested in Palantir for a long time, I mean, you have to be, yeah, just have to either accept it or be aware of it. Let me just pass to my co-host Dominic and Jacob.
Yeah, I think you have to hit Jacob requested back. I think he had to fall off for a second there, so make sure to approve that request there. Yeah, I would totally agree with you, Sakin, as far as the numbers are lagging, right? So when you're looking at a company, and if it could be, you know, a $1 trillion market cap or whatever number you want to say, I like to just say a company that lasts for decades, right? Because what do we know historically in the S&P 500? Within 15 years, that thing gets shaken up, and there's only like 10% of the companies actually left, because there's only certain companies that last for decades, and it's because of their founder-led leadership. It's because of their employee culture that they make, that people want to stay and work there. And then it's also about the problems that they solve and the return on investment and value they bring their customer base. And so with that, I believe they fit all that criteria. I believe that with the different use cases and their understanding of themselves, that they needed to change to grow at scale and truly achieve their goal, which is to be the ultimate software company in the world and achieve alpha for any kind of industry that's willing to change and be aggressive in innovating. You have to really focus on expanding to the mid-market. You have to make it easier to adopt. You have to have marketing. You have to have salespeople. And they're doing all of those right things. And so it goes back to that, you know, Tesla type business model that people, you know, if something's broke, if something's not broke, don't fix it, right? There's some of the greatest minds and companies out there that started with premium offering products or even freemium product models to then get adoption. At the end of the day, why do we like SaaS? We like SaaS because it's reoccurring, it's predictable, it's high margin. We like the ability to see an ecosystem because that means more opportunities for growth. And we want to see customers stay with that product and stand by it, right? There's a reason why Apple leads in North America as the main mobile provider, because they have a brand. They are probably the most well-known brand in the world. Well, I believe for the enterprise, over time, we will see with all these different use cases and the numbers to back it up and the evolution of the product line, that Palantir could be that brand for having a operating system that you, just like you ran Windows for the operating system for your laptop or desktop, the operating system for your business that makes it more profitable and makes it more streamlined, that makes it more efficient. I think they're executing on that and they're showing that. So don't pay so much attention to the numbers, but look at what they're doing from a use case model. Look at how they've added 60 new sales reps this past quarter. Look at the marketing commercials and redesign of their website. They understand people are talking to Alex and Senkar and making sure to whisper in their ear that if we want this to go global, if we want this to be what we're trying to strive for, we do have to conform a little bit. And they're doing it in a way where they're executing, but also they're keeping the company culture intact. And they're also keeping that culture of who they hire intact. Because you even heard on Sankar, he said, we're a artist factory, right? We're not a traditional factory where you're just going to go in and get your engineer 2 level and your engineer 3. No, you have to be willing to be nimble, flexible, and adopt that company culture. And they have that, and people are following there and staying. There's a reason why they say 17 years before they went IPO and still collected and then finally got those shares. And a lot of those people are still there. So I think they're doing all the right things in what you build a legacy of a company.
Hey, thanks, Tom. Just reminded me of the example. It was one of the first time I interested in Palantir. I mean, this is so BP partnership with Palantir started in 2014. So guys, this was the time when the oil was $100, and if you would have asked any oil and gas company, I can tell because I was there, is nobody would have thought that the energy transition and these companies are going to invest in offshore wind and large solar plant and the retail electric and all that. Now BP started their partnership with Palantir with the focus on improving production operation, automating a lot of data solutions in terms of either reservoir characterization and other cases. However, as we saw that whatever happened in last 2-3 years, BP actually pivoted their strategy largely from oil and gas moving forward towards renewable, and they have made some of the quite aggressive targets for themselves. But as we saw that when BP was working on production operations in North Sea, they actually started working with Palantir for the distilled model, which came as an Alex. Name is Alex. I mean, you can see on YouTube on it. Then last year, BP ran into crisis when they went into COVID-19, and this is where we saw that the use case of using Palantir for supply chain came up, and they showed the savings, like how much savings they have done. And then BP decided to move into the renewables, and they said, okay, we are extending our partnership with Palantir in terms of renewable energy, in terms of carbon abatement studies we are doing. So what they are seeing that the flexibility of the tools. That means once you have this tool, and once you get acquainted with it, it is multidimensional in a way that means tomorrow you are looking to explore in a direction that was not on your radar when you started the partnership. It is still a healthy partner and probably the strongest partner to work with you. And this is one of the things which is also being identified by some of the other large legacy company partners. So, for example, Merck has a partnership with them in a form of a venture or company, which is Syntropy. We know that how Airbus used them for Skywise. Having said that, I mean, everything is not so rosy for Palantir. Our company is free from risk, and apart from like geopolitical risk, there is one risk which is very alive in my mind. What Palantir is, if I exclude the government software segment, especially US government software segment for the time being, and if I exclude whatever they have done in terms of COVID last year, we are not seeing Palantir yet dominating an industry outright. So, for example, I mean, you go in an industry, say a pharmaceutical, and you say more than 30%, 40%, or the leading ERP solution in this company end to end for big data is Palantir. That has not yet achieved. And this is where one of the big risk is the two school of thoughts that we discussed, that either enterprises are going to adopt one solution or they are going to build a lot of bespoke solutions working with several partners. It is not yet realized. If Palantir has to become monopoly over the time, Palantir has to dominate at least certain industries. In order to dominate those industries, they need more diversity of people. In terms of this diversity is the people who are coming from different backgrounds and in different parts of world, which allows them build relationship in these industries and help them to understand how to best deploy your solutions at a very fast rate in these industries. So until and unless, I mean, I start seeing Palantir dominating these industries outright, I mean, I will always keep it as risk. Even in the US software segment, if you remember the discussion what Alex and Shyam discussed last time, was they said the US or the government part of their business has a total addressable market of 63 billion. We already know that even if we take more than half of their revenue coming out of government, even if we take 70% out of it, this is still a little shy of a billion out of it. That means out of the total stated market they had of 63 billion, they still have not reached that kind of density within that market. We have also seen that since COVID and geopolitical threats between US and China, the increased spending on AI, that revenue, the total addressable market for government is going to increase. So even in the sector where they are very strong, they still need to build that kind of a strength where they control at least 4 to 20% of market. Because once they reach that point, I mean, their overall revenue will have a significant boost. So having said that, all hints are saying that they are moving in that direction, but they hasn't reached it. The journey is still quite far. So these are the kind of things. If this doesn't happen in next 1 year or 2 year or 3 year, I mean, yeah, I mean, I'll be a bit concerned and I'll be thinking like, okay, what's going on? So, for example, another next marker for me is a target that which quarter they actually achieve 400 million. And my bet is that it should be the next quarter. Okay. I also expect them to reach revenues of 600 million by the end of Q4 2022, because the way they are going, I mean, a company like this should be very sticky and should keep generating more revenues with existing customers and finding new customers. So yeah, I think that I'm very interested to see like how it works out. One thing which I'm missing in presentation, I mean, I know the information exists, but not yet shared for strategic reason is I want to understand like what are the financing gains. They haven't reported any financing gains from any of the SPAC investment. So once these SPAC investments goes and the companies become public, they actually have to book at some particular time that what they invested and how much financing gain came of it. It will be different from the cash that is coming or the revenue that is coming from operating activities. It will be revenue from financing activities. We have not seen it yet. We also have not seen the integrated details that how they are going to generate revenues from these companies in future. Is it license? It is revenue sharing. It is a risk performance mode kind of system, because these companies are built around Foundry. So all of their revenue is directly related to Foundry. So what is that system? Is it a fixed fee? Is it a milestone based fee that Palantir will not charge until they reach a certain milestone? After that, they will get a flat fee around it. Is it a mix of it? We don't know details about it. If it turns out the way they have gone about it, I think they're very clear that they always want a fee model which is linked to performance, because they are backing themselves that with their product, they can really improve the performance. So I'm very curious to learn what are these models with the companies like Lilium, Argos, Road, Cellularity, and how that revenue from operating activities from these companies will come, and what is that model, how it is accounted for. What's the financing one is okay. I mean, I assume it's based on the equity they have taken, but I still need to see what kind of equity gains they get in. So this is what probably I would be looking forward in the next calls, or probably next few calls. Guys, any of you who wants to come, want to share, ask question, just please raise your hand and just send a request and I'll bring you in. Dom, Jacob, would you like to respond? I mean,
well, Jacob, yeah, I tried to approve his request like multiple times. It's not. Maybe you have to approve it, so he's not able to speak just yet. But if you approve that, he should be able to. And would love to hear the Wealthy Al and some of these others that are part of the Palantir army. The Wealthy Al definitely wrote the best 101 on what Palantir software is by far. If you haven't checked out that article, I think got retweeted like 100+ times and over 500 likes. So would love to hear some of the other Palantir shareholders and what they think of the earnings.
I agree. Jacob, I'm trying to add you, but I'm not able to. I mean, I have invited you, but no response. Would you please like sign off and join back if that can help? Yeah, I think please, guys, the Wealthy Owl. I mean, I agree with Dom. I think it is one of the best article I have seen on Palantir. Quite detailed. Would love to have your thoughts on it. Jacob, I think you have joined now. Would you like to pitch in?
Yeah, I think it's time to get a new phone. Twitter is pretty glitchy on mine. But I just wanted to comment about what you said about kind of the terms of the deals with the SPACs and what those kind of look like. What kind of licensing agreements? You know, do they how much are they charging for Foundry, and is it contingent on certain growth? Stages of each business. I think questions like that would be awesome for Say. Anybody listening that hasn't created an account on Say, I think it's Say Technologies. Correct me if I'm wrong. We as retail investors, we can ask some kind of interesting questions that analysts might not be as concerned with. Theirs tend to be more financial based, but we can kind of get down into the nitty gritty of Foundry for builders and things like that, and kind of what the relationship is like with those SPAC partners. So I think for everybody listening, if you go create an account on Say, upvote those kinds of interesting questions that we might not otherwise hear from Wall Street.
I think that's a very good point. I think also within internal groups, like with discussions we do, I think we need to frame these questions and post in time and promote them on Twitter Spaces so that we get the required votes. Some of these questions to be selected for the next investors call. Hey guys, one thing I'm very keen to understand from your side also. I mean, I have my own views that I shared on the risk of the Palantir. What are the milestones we are looking? I mean, who could be the potential competition? Because one thing I always believe is that people are really genuine sometime in bringing new innovation. That means if you push some of the quality guys and you pin them down to in the wall in a competition with Palantir, some of these will come up with some solutions. They may not sustain, but they will fight back. I mean, and so these things will happen over the time. And some of these we don't know. I mean, they can succeed also. I mean, because the way they present it. So, a view in terms of the risk on Palantir and what would you like this company to do? What are the different milestones you would like to see, and who do you think is competing with them directly, indirectly, or could be a very large threat in the coming years? I think because we are all talking positive, but to be fair, I mean, Palantir is not yet generating 20 billion revenue per year, and a lot of things can go wrong in their journey.
Yeah, no, I think it's always fair. You have to ask the bear case and look at both sides, right? As an investor, you always have to do your diligence and think through that. They're not the biggest company out there, right? So when I think of bear case, I think of who has more cash to throw at creating a competing product. Now, granted, their product has been around for almost 20 years, and they have a good footprint of keeping customers and have gotten those government contracts. But always you have to have in the back of your mind, if they keep capturing customers and having customers run this software as their core business in the ERP space, and even just in general in tech, why wouldn't a Amazon or a Google or someone who has the amount of cash to throw at innovation and talent to create a competing product? For me, that has to be one of the bear cases there, because at the end of the day, right, with stock-based compensation, how they kept a lot of the great talent they had was by enticing them with stock-based compensation. And they wanted people invested in the company long term, but cash is king. So as we've seen with all these different acquisitions and mergers that have happened in the last 24 months overall in tech, and will continue to happen, I think you just have to be respectful of that, because you never know what could happen with those companies that have the kind of cash at hand to throw at creating something as a competitor.
I personally see a lot of most of the risk that I'm looking at is internal to the company. Do they become complacent in their pursuit for talent, or do their rate of innovation, does that slow down? They've introduced several products since their direct listing, and if they stop innovating and delivering more value to customers, that's what I'd be most concerned with.
That's well said.
Yeah, I really, founder-led companies are really like head and shoulders above the rest in terms of innovation. And Don, what you're saying about external companies, I don't see a whole lot of them out there that kind of have the founder-led drive that would concern me too much, especially with Jeff Bezos leaving Amazon. They've had a long track record of reinvesting capital, but with him gone, I don't know if they're quite as much of a potential competitor.
Yeah, I was just throwing names out there. Like, I don't know, I agree with you. I just, you look at everyone always likes to talk about SAS, the company SAS. In fact, I think the last time we had a Spaces, a gentleman worked there and said that they do just as well as Palantir. And then, of course, everyone likes to point to UiPath and RPA and C3 AI. So if a Microsoft or someone bought a company or a couple companies like that, could they put the talent together to compete? But I agree with you. Founder led is really important. And probably the biggest risk is what if Peter Thiel and Alex say, we've made our money and we're going to move on? I think that's probably the biggest risk, right?
Yeah, if Alex is, kind of thinking, it's time to retire, that might slow things down a bit. But I was going to ask, I mean, you've done quite a bit on NVIDIA, and they're coming out with some really interesting collaboration tools. What do you think about their ability to kind of connect siloed data and different organizations together through what they're building?
Yeah, no, you're spot on, and I'm really hoping that NVIDIA partners with Palantir and doesn't want to take them head on. I hold both. NVIDIA is my third highest sharing, and I think what Jensen's doing with the metaverse and what we've seen already with opening that up, and if you guys see my YouTube channel, I've talked a lot about the Omniverse and how they're already getting so many big names like what Palantir is doing in the metaverse and collaborating with joint data and tools and things of that sort. And I truly believe NVIDIA is redefining the data center with their 3 different chip architecture that's switching every 18 months. The amount of performance improvement on compute that they're giving forces people to buy the next thing. So it'll be interesting to see if they want to compete versus Palantir, or do they partner, and what a partnership that would be with what they could achieve together.
Yeah, that would be really, really interesting if they did come out with some kind of partnership.
No, I agree, Dom. I think it's an excellent point. Of all the companies we normally discuss in the same capacity, I think there's one company like C3I does. I mean, I have very strong views about it. I have done quite a intensive deep dive. I have seen their work in my sector. It's a nice company, but in my personal opinion, and I might be wrong, but I think it is too over. How would I say it's over advertised. I think the company spends more money on advertisement than it spends on their R&D. Their CEO is quite a darling for the Wall Street. So it's a nice company, but I mean, I don't see it as a special company. I mean, Nvidia is one I love a lot. And the reason for that is I think, and there are a lot of things happening in this domain, because for me, like Nvidia's focus has been hardware, but they are very smart in terms of like what software ecosystem they need around it to actually push for it. So I do believe that there should be more synergy. I mean, if they move in this direction rather than I mean going head to head with Palantir. So I would hope that. Another thing I think which is quite amazing, and I have discussed with few of you, is like I think what is happening in the ARM space and what Apple has done with their chip M1. I mean, Microsoft also tried the same thing with SQ1 and SQ2 last year. I think this space is heating up, and there's a trend in the tech industry which is going more towards vertical integration. And I think this is where the companies like Palantir, I'm super interested, because it's already vertically integrated in terms of the data pipelines, the chain, the solutions. So it's the differentiation, the monopoly we talk about, the differentiation in a strategy we talk about. We are seeing that companies are opting how they can be more vertically integrated. So that's a plus to me.
Yeah, no, you're spot on. I mean, what they do with that dynamic ontology is exactly that. They are the enabler of vertical integration for a company. If I could cut my costs to a point where it makes sense for me as a semiconductor company to actually have my own fabrication facility and do my own chips, because NVIDIA still does a lot of theirs out of Taiwan semiconductors and Lam Research and all of those partnering, because it is just so expensive to stand up a facility like that and to get those processes down. It's easier to just purchase out. I think that, as these behemoths start, continuing to vertically integrate, Palantir can be the enabler to give them the efficiency so they continue to grow those operational margins. I think another space we got to look at that both NVIDIA and Palantir are very passionate about and have been involved in different capacities is genomics. I think genomics is the #1 industry that will emerge in the next 20 to 30 years as far as gene editing and health is wealth and fixing our healthcare system. And we all know, in order to get better gene sequencing and to get better in this area and to improve the healthcare system and conquer diseases, you have to have compute. You have to have better compute and you have to have better AI. So both of those companies have that. and Palantir has already put their stake in several, Cellularity and some other different companies around healthcare and gene editing. I am just shocked to not see NVIDIA or Palantir just buy outright some of these awesome gene editing companies before it's too late, where a Moderna picks up Editas or someone else and take that technology and enable it, because we know gene sequencing is coming so much cheaper as years go on. I know that NVIDIA partners with Schrodinger very closely. I just want to see someone wrap one of those in the company and say, you know what, this is another business leg of revenue that we have. And it would definitely be wise, since they have the compute and AI to support it.
I agree. Hey guys, one thing I would like to discuss, and I know none of us are comfortable discussing this, but I think it is good that we discuss in an open way rather than any financial advice. Like, what are our views on the Palantir stock in short time, in terms of long term, at least like 6 to 12 months? I mean, it's very fairly clear we all are extremely bullish in a longer term. Let me share mine first, and then I would like to listen from both of you as well. And guys, everyone who's listening, it's not a financial advice; it's just something on. So I believed for like whichever way the stocks have behaved, especially since February, given the macro, and we saw that several times the stock price has made a foray to move up, but every time something happens and it comes back. So my thoughts are that hopefully first with this earnings, we should at least move the floor of the Palantir price. I mean, we saw that Palantir price has been dwindling between 21, 23. So hopefully that 21, 23 should become 23, 25. I hope so. As far as moving up is concerned, I mean, until unless, I mean, I see like close above $27.5 or 28, $29 for like 3 to 4 days consistently, and preferably over weekend, and opening on Monday with a gap up. To me, that will be a sign that we are moving towards 30, 35 range. Until unless it doesn't happen, I mean, I'm a bit bearish of a price moving above 27. And if it stays below 27, I mean, we'll probably be like swinging in this range anywhere between 22, 26 given time. And if extreme down days, like we have seen sometimes in May and in August, we may see even lower at times. I think nothing is guaranteed, but I mean, broadly, what I see is I still see a cap on Palantir stock in shorter term until and unless I see a move up. I don't know. I mean, probably by the time I wake up in the morning, the stock is 30. I would love to have that and being wrong about it. Yeah, these are my views based on what I have seen in last past days. I'm not selling any covered calls because it's a kind of a stock that can shoot anytime. So I'm trying to stay very conservative about that. But yeah, I think that's what I think. I mean, Dom and Jacob, what do you think of what's your views on the stock price movement?
Yeah, I mean, it's up almost 13%. It was up 13% earlier. And you look at the RSI and I'm not a chart guy, nor is this financial advice, but you look at the chart and it's almost over 70 RSI, which typically things come back down after that. I would love that it would at least base, here in next week, and we see it, that the new floor is at $25 and above, opposed to that 2021. But with the fact that we're going into the season when the market is most volatile and we see those dips and drops and those overreactions in Mr. Market, we could see some buying opportunities. It could go back down to 20, 21, even below 20, go to 18. And if it happens, I'm going to load the boat. But I do think, to your point, we should see a new floor after the consistency of these earnings. And the chart long term looks like we may be entering a new floor, which would be, nice. What do you think, Jacob?
Yeah, I agree. I think it's stayed right around the average analyst rating for the stock, and then that run up to, I think it got up to about $27 before it retraced a bit between the last earnings and this one. I think, yeah, with just how much float is out there for retail, there's a bit of exaggerated movement, like you said, in the Mr. Market. I would certainly, like me personally, and again, not investing in Vice. I'm going to see how analysts react if they upgrade their rating, or what would be very bullish for me is more analysts just initiating coverage on it. I think there's only half a dozen or so actually covering Palantir. But yeah, I think with how much float is out there, it's gonna hover around that average rating that analysts have, and I'm not expecting to be wowed. I think slow but steady movement quarter over quarter is what I expect from the stock.
That makes sense, man. Thanks for sharing. Man, I have a thought and more of feeling about Palantir. I mean, I just want to test it with you guys and the audience here. Have you guys come across Google Knowledge Map? I mean, see, Google is not a company, I mean, that you can written down so easily. And we all know their prowess in AI overall. We all know that they are also handling some of the largest data sites on. They have their own kind of expertise. They're also in the infrastructure war with AWS and with Azure. Of course, there are other companies as well. I mean, in the domain, but they are quite a serious player. So my I have two thoughts. My first thought is that at this particular point, I mean, Google being involved in more of an infrastructure war, their focus is more on AWS and Azure. The second is they're also aware because they also become a large company when nobody saw them as a threat. I mean, Apple and Microsoft was already quite big when Google started. So they're also aware. They have seen how Facebook happened. They have seen some of the battle lost as well, like in terms of social media space. So they also try to ensure that they stay on top of things. And it is pretty much clear from the statements, especially what Alex and Peter Thiel has made in past. And guys, just full disclosure, I mean, I have several investments with Peter Thiel companies. I mean, Palantir is not the only investment. I have a few others as well, both in pre-IPO and in equity market. They know that Peter Thiel has an ambition to build a company that can upset Google in a way. I think he has said it several times directly and indirectly. So they see that there is a guy who has an ambition to go against them. He has a company, he has a tool. So at some point, Google will respond to it, and I don't know what will be that response and how threatening it will be. But I do believe there will be a time we should see a showdown between Palantir versus Google. So I mean that's a thought I have. Let me know, what do you think of this, guys?
No, yeah, that's what I was getting to earlier of who has that cash to get the talent and the AI to the point where it competes. And probably Google's the number one there who has the tech, the talent, and the cash, and the experience with AI and the data that they have captured. You know, one of the things that I think hinder Google is the fact that it's so spread thin in the fact that it has its hand in everything, which sometimes can lead to a lack of focus for a company. And when you have so many business units, it really is hard to move fast and nimble and win verticals and win industries. But if they split off or started really building out a specific, AI, maybe even just say a company out of Google that's AI focused to respond, that would be interesting.
Yeah, it's interesting to hear old Peter Thiel interviews where he does nothing but criticize Google for an hour, and I don't know. I think they'll try, but I'm just not. I have no confidence in the larger tech companies' ability to innovate at all. I think they haven't really developed anything of note that's actually been applied to the real world. Other than search, it doesn't mean they're not printing money, and they're good companies, but I mean, to echo Peter Thiel, they don't know what to do with all their money. They just sit on it, and they don't know where to invest. They move slowly. I mean, just like Microsoft and Apple, what they're best at now is acquiring innovative companies, and I think that we might see something that would would indicate that they're trying to develop something to compete with Palantir, but I'm just not confident at all that they'll do anything of note.
That makes sense, man. I mean, you reminded me like what Peter Thiel has said at times that, I mean, the company, like as you categorize, I mean, in the consumer internet space, I mean, he said that we have made a lot of progress in terms of bits, but not in terms of apps. I think that's the best way to put it. But I have to share a few funny things as well, because I mean, I've spent my career in industry and have seen some of these things on front end, have seen some digital transformation gone bad also. During my career, I get in the projects where we implemented some large digital implementation projects. During that time, we end up spending time with the company CDOs, CEO. I mean, building out the press releases and things like that. So one of the funniest thing I have heard, and this is actually this month, and this is actually the first month of my own venture for my own company. And I was helping a friend who is a kind of a president of digital in a very large company. I mean, this is really large. I mean, we are looking for a company which is like $30 billion market cap. And one of the funny thing he asked me is that he was asking me that what are the different companies we do need to partner with. And I asked him like, do you have the fitness of in terms of data space? Have you done this analysis? And I was helping and building like what's the go-to strategy would look like. Now he said that he's being pushed by his CEO. We need to show some partnerships to the media. That means we are active in this. If clients want to spend money on AI, we need to show there are some partnerships we have with AI. So what we are seeing here is that there are very large companies who are under pressure, up to some extent under imposter syndrome also, to show these partnerships. And that we are seeing there's a flurry of partnerships that this company has partnered with another one, this company has partnered with another one. I think it becomes very important that whenever a partnership is announced, we should go and see what they are actually trying to achieve with it. Okay, so for example, I mean, I'll give you some example of a couple of partnerships where you can see the strategic fit. So take the case of C3 AI and Snow partnership. Snow is in the warehouse space. They can arrange data, help you data in running the data, but they cannot generate the full value until and unless there is someone who is sitting on the smart layers, business layer, who actually generate insights out of this data. So when you put C3 AI with the Snow, it makes sense that yes, they are complementary to each other. Then you get to hear same thing, like for example, when IBM and Palantir partnership came, the idea for Palantir was that they wanted to put the Palantir, the CRM system, especially in the cloud pack of IBM, and to use IBM Salesforce for this. So there is always this layer of strategic fit of these partnerships. Until and unless we don't see these layers, because a lot of time we will also see partnerships, like for example, in this particular case, I will not name the company. This company went with a very big energy company. They built the partnership. They also went with very large infrastructure cloud provider, and there was a lot of buzz about it, a lot of advertisement about it. But then when I was talking to the people who were running this project, nobody had any clue because they didn't have any idea that what tech one company has. And in this particular case, there was one company with market cap of 5 billion. There was another company with 50 billion, and there was another company which was 1.5 trillion. So there was a perfect misfit, and this partnership made a lot of buzz, but didn't result in actual revenue. So the point I want to make is that whenever we hear about partnerships, be it Palantir, be it any other companies, it is very important to see that what is the strategic and complementary things they are providing to each other. So for example, in the case of Snowflake, I mean, they are already present in a lot of customers, and they're helping customers to build their own do-it-yourself kind of AI ML solutions, or the enabling those use cases, but they don't have AI ML capability, so they need partners to do it. So being there, working with C3, I mean, it has a strategic fit. Whether that use case generate an alpha value, that's a different part, but there is a strategic fit in that partnerships. But then there's a lot of partnerships that CEO comes welcomed by CNBC or some other channel, and they declare it, but don't get to see the details. So I would request, like when you get here about a partnership which Palantir has done or any other company has done, always create a discussion around it and how it will help, where it will help, who are the customers, what's the value to customers by these partnerships. Because at the end of the day, that matters. If it doesn't run that way, yeah, I think a lot of these partnerships are buzzword. Most of the Wall Street CEOs' average duration is 2 years. And in these 2 years, I mean, they can mess up only 1 year. If they don't deliver result in the second year of their term, 80-90% chance they are gone. So there is a CEO and the C-suite context that comes. And guys, please remember that a lot of these people do not buy the best solution. They buy the solution that makes them look good. So we need to be same thing in the organization also, that if you are in a government organization, or if you are in an organization in procurement, people will want to buy a solution a lot of time which is not controversial, which doesn't put any inquiry of them in future, especially like for example in Asian or African context, or in Latin American context also in some of the countries. People want to buy safe things. So something is very radical, something is require something is higher on the cost budget, I mean, it's always create discomfort. A lot of time I've been in.
Stockton, just one quick comment on exactly what you just said there, because I live this every day with selling security software and dealing with procurement and those IT, the CTOs who have to make those decisions. They want to look very good on what they chose to invest in and adopt, and that they were the person responsible for bringing it into the organization. I do think over time, the alpha that Palantir delivers will be a reason why people will start procuring more Palantir because of the return on investment. It's such a challenge in a lot of these SaaS-based businesses in the world that I work in, that to actually define ROI and show it easily without, the numbers looking ungodly and not realistic, the fact that they can show it very quickly on a return on investment, I do think will lead down the road for more procurement to want to lead with that. But I totally get what you're saying about just right now, they don't want to touch it.
Yeah, I've seen this. This is why I say that the context it becomes more important in ERP or in organization domain than in personal life. So yeah, this is something which, like you said, Dom, I think as the alpha value gets proven more and more with time, I think the decision becomes more simpler. I think companies simply get into this herd mentality at one point. Let's buy what peers are buying. There has to reach that point as early as possible. Guys, based on the timing, and I do not have anything on my head which I would like to share. Let me just open it Q&A for everyone in the group. Please raise your hand. Please ask request access to the floor. And if you want to tweet, you can tweet also, whichever way is convenient, and we try to answer your question as best as we can. I'll take a pause of 30 seconds. In the meantime, if you want to come on the stage, or you want to share your views via tweet, question, whichever. If there is no further discussion or thoughts from my side, Dom and Jacob, you also feel free to share your thoughts as well. After that, I think we can let everyone go then.
Oh, come on. I want to hear from Dylan and the Wealthy Owl, Alpha Extreme. There's some Apish. There's some, I don't know if Mayhem has just joined, but there are some great investors on this spaces. I would just love to hear you guys talk about it.
I have invited them several times. These guys are just buying Palantir as much as today, and they just don't want to share anything. Dylan, please share your views, man.
Hey guys, can you hear me?
Yes, Dylan, I can hear you.
Yeah. First off, Palantir is one of my biggest positions. Actually, it is my biggest position. And I remember looking into it last year at about $9.50 a share, and I instantly knew that this was because everyone was talking about Snowflake at that time. And I remember looking at Palantir and seeing their tech, and then seeing that like what they were doing, and then really like there's not many companies out there that can really take what they're doing in the government and then integrating it within the commercial side. So that was what really caught my attention in the first place, that they were actually able to do that. But I don't really understand the tech. I'm not necessarily an engineer. I think that there's much smarter people on this call than me when it comes down to talking about what they're capable of doing. But as far as Palantir, when I first saw it, I remember first thing thinking to myself is the use cases for this are limitless. When you take just financial metrics and you think about it from like an investor standpoint, I ended up saying that it could potentially be a $1 trillion business later on down the road. And I'm saying this like within the next 2 years. And the reason why is that it has all the recipes for that accelerated growth trajectory. Because if you think about it, it is founder led. Alex Karp is probably a mad genius. And then you see the 80% plus gross margins, which means that this business, if you got rid of stock-based compensation, there's no doubt that this stock would double from its current price right now. But just because Wall Street is always thinking like within the next quarter, that they can't help but just think short-sighted, and they can't see the opportunity at hand. Especially when you think about it, its capabilities from data and analytics, like there's no other company that can do what they do. It sounds like, for me, from a non-engineering standpoint, from like just a finance guy, like it sounds like it's Jarvis, off of Iron Man. That's essentially what it sounds like to me. Palantir, this quarter was nothing short of impressive. Seeing that commercial growth, 90% year over year, that tells me that what they're doing is successfully working. And I can only see that there's going to continue to be accelerated sales growth. I think this is something I said a couple months ago too, and I said because Palantir's TAM is so large, and because they spent so long investing into their business in the first place, and because they have the liquidity capable of investing even further, it seems like we're really going to catch Palantir right now today on an accelerated growth trajectory. And I know Alex Karp only said 30% for the next 5 years, year over year, compound annual growth rate. I think he's sandbagging it. I think that it's going to be a lot more along the lines of 40 to 60% over the next 5 years. And it has a lot to do with their commercial business and then getting on into the SMB portion of the market, as well as like large enterprise. And then you can see that they're continuing to collaborate with other different governments. So it's the use cases for them are limitless. And it really becomes a lot less of what can Palantir do for the customer compared to how much can the customer afford. And when you have sort of pricing power, when everybody wants your software solution, then it seems like you got a massive competitive advantage over anybody else, and even over Microsoft, even over Google. Despite Google's best, tries at beating Palantir on some of those government contracts, there's no mistake here. There's no mistake. This is going to be a tech supergiant later on down the road. But I saw that M joined, and I know he has a lot of thoughts.
Hey, Dylan. Yeah, I caught a lot of what you said. I definitely agree. Great. And everyone who's speaking here and everyone who's listening here, thank you all. I think that Palantir is one of those investment opportunities that might be one that kind of comes along once in a lifetime. When it came out and it was a direct public offering, I got in at about $9.50, and I thank Peru for giving me a heads up that the direct public offering was happening. Palantir's been a company I've followed for about 10 years. I've been really impressed with their technology and their trajectory. And, even when it was just Gotham and that was their core offering and they were just in the government, I saw a bright future on the horizon. And when they started talking about Foundry and what their potential is in the commercial segment, that's when it really clicked for me that I wanted to be an investor in this company. So when the DPO happened, I already felt like I knew a lot, but I still did a deep dive and I was even more high confident. So Palantir is my largest position. It's been that way. Part of it's organically, part of it's because I, started off with a lot of conviction in this investment. And this earnings call and the actual earnings that they put out were, I think, in a lot of ways validating the core bull cases that we've been talking about for some time in this company. The biggest bear case that consistently we would hear was, oh, well, they don't have commercial customers. They're not going to grow in that area. They're basically a defense contractor. So they should have the multiple of the defense contractor because they have this one really large concentrated customer in the U.S. government. And of course, you can take that bear case apart any way you want. You could say, hey, the U.S. government isn't just one customer. They also have states and local. They also have different bureaucracies in the U.S. government. So that constitutes a network of customers and network effects that flow through those channels that increase those customer relationships and their stickiness. But the other part of it is that, we see them executing full throttle in commercial. Like Dylan said, 90% year over year growth in commercial contracts. I think something like 63 new customers. They took investments. So they're actually buying into some of these smaller companies. And as a part of that, they're also offering them Foundry for builders. So they're like, hey, we're going to jumpstart you with funding, and then we're going to give you a tactical advantage by allowing you to access Foundry at a reduced cost because, you're part of this ecosystem that we're building. And you'll notice with each one of these companies they invest in, they're in unique sectors. And that gives them the capacity to say, we're going to keep building on Foundry and all these different horizontal and vertical opportunities, which means that the software itself becomes more sophisticated. And so what did we hear during the earnings call? Micro constellations. How much is that? They're talking about controlling entire networks of satellite with embedded versions of Foundry AI in each one. I have to tell you, what that means to me is that this is just the beginning of just this part. Like, Dylan talked about expanding TAM via getting into, smaller and medium-sized businesses. I think that's huge too, and it invalidates another bear case. But let's talk about embedded. Let's talk about Foundry AI embedded in devices and how bullish that is in terms of the total long-term trajectory of this company and what they can get into. I mean, why not get into self-driving cars long-term? I think that's not off the table here, and that's something we need to keep an eye on as well. But you talk about the Internet of Things, 5G, sort of industrialization of all that. Foundry AI is going to have a role in that as well, especially at the embedded level, and especially as they expand across other sectors and other business sizes. So it's really, really amazing to me what they showed us on the call, because it presents a lot of value to both corporate and government customers. It allows them to expand which markets they're operating in. And then we're talking about Foundry for Builders. Foundry for Builders is to me, exactly what we've wanted to see the entire time. Because a lot of people said, okay, well, let's say they get really, they make a big inroad into commercial growth, right? And they're just in the enterprise and they have, close to 200 customers or over 200 customers in the enterprise now, right? and they wanted to get to 6,000 or something in that range. Well, now we're talking about a much bigger market. We're not talking about, a just targeting the Fortune 5,000 or 10,000 biggest companies in the world. We're talking about them being able to target startups, small and medium businesses, all of which are data on the data intensive side of the spectrum. And the reason that that's really, really bullish is digital transformation is not a transient trend. This is a long-term trend. There are businesses all over that need this kind of software that can tie not only the ability to understand what data they have, but to pull it all together from disparate sources, from CRM, from ERP, from inventory management. Everything that they use needs to be coalesced, needs to be something that they can visualize and execute on in real time. And that creates not only competitive advantage, or as Palantir says, it produces alpha, but it also creates a sticky kind of, you could call it, it's not a traditional definition of an operating system. It's more of like a business operating system, a platform as a service. It's very, very tempting once you get into that ecosystem to keep building into it. It's very hard to get out of it. So the other thing that Palantir has that works to their advantage with Foundry as they grow, especially with these smaller and medium-sized businesses, is it helps them to jumpstart their growth. It helps them to not build out these bespoke solutions. When you have like one management system, a different HR system, they don't talk. You lose a lot of efficiency that way. You're shuttling things back and forth manually. This all gets coalesced. So the reason that I think that, when you look at the trajectory of Foundry, they're firing on all cylinders in all important directions. They're expanding the scope in terms of which industries they address, the size of business, and then the actual applications, because Foundry used to be something that would be hosted on-prem or in the cloud. Now you're talking about having elements, the core elements of Foundry in the device. Well, I couldn't be more bullish in terms of looking at the way that Palantir, just over the last quarter, has evolved. Think about where we came from. Last quarter's earnings was concentrated more in government. There wasn't Foundry for Builders. There wasn't this embedded version of Foundry. There weren't these investments in these smaller companies that kind of help us to prove the use case for Foundry for Builders. Now we have all that. We have validation. So I think that this is a really exciting time to be an investor in Palantir. And my take is, what it's been the whole time, that this is probably going to be one of the biggest companies in the world and one of the most important technology companies in the world long term.
Hey, thanks, man.
I'm going to say one thing here real quick. If you want a software play on space, Palantir is the software play that we have available to us right now today. I mean, like what you were saying there with the satellites and all, they're basically running like a connectivity between them. That's essentially saying the Palantir, and they've said that on multiple of their earnings calls. They said that they were built for it. They were built for space travel. So this is something to really take away too.
Yo, I'm consolidating more. I'm gonna have to sell some positions off and get more into Palantir. Mayhem just dropped the mic.
Yeah, I mean, thanks, Dylan and Mayhem. I mean, this is amazing, man. One of the discussion I had earlier this year with one of the CEO of an IoT company, and we were having just a coffee chat, and the idea was that what the trend looked like. And so this is an IoT company in the sector where I predominantly work. This guy said that we are looking to change the devices as well as the edge AI analysis that we do. And I was asking why. They said, what? Earlier we had a lot of bandwidth issues, but now with the SpaceX coming, we probably will have a very large bandwidth, the kind of the sensors we are going to use, as well as whatever happen in this embedded analysis of the micro models on the edge, they are going to be far advanced than what it used to be. So we can do actually a lot more analysis on the edge. That's exactly what Mayhem was mentioning, like what Palantir is doing. So to me, what it looked like is, and I have discussed it in past briefly on my Twitter feed as well, that the edge computing is set for a very large disruption, because what we anticipated is to be done at the edge 5 years back has completely changed. And it will change as we see these more broadband network, especially on LEO-based constellations, comes up there. And at the end of the day, one of the things, and this is one of the struggle I had in my early part of digital transformation, is before cases are done, people estimate what's the value will look like. To be honest, actually, and this is what it's been said, and the Dom has also captured earlier, is the value of digital is actually slightly limited by the creativity and the nation that a lot of these companies have, because they can go really far. For example, like when Peter Thiel shared that when they sold PayPal, and they actually sold the value at 180 million, and that particular time, the most of the revenues were coming 11 years plus in ahead. And yet the value of PayPal today is far bigger than what they have anticipated. So the value of revenues in future in these companies is quite high if they get their act right. Let me give you, I've got a direct message, what do I think of value of Palantir in 2030? So guys, I'll give you a very simple model I have for Palantir. Is today last year we saw that their TAM was 119 billion. 63 of that was government and 56 of that was commercial. It was the time when they were not doing Palantir for Palantir Unlock, Palantir for Foundry under the spec. But we are also seeing that this is a static number they have given. Number is actually increasing and most likely in a double-digit compounded annual growth rate. So if the government is 63 today, in 2030, I expect this number to at least be twice than that. And I'm telling you that I'm being conservative about it. So let's take that number just for a minute of 126, and you can sensitize it the way you like it. Take the 56 of commercial of the large and legacy companies. Okay, I'm not adding any mid cap and a small cap. And I'll 56 the same compounded growth, and I put it somewhere around 112 on top of it. And I say like even in the government where they are dominant, and they actually even managed to capture 10% of it, that is 12.6 billion. And in the commercial where they are 56 to twice is I'm taking like 112. And even if you take like a small percentage of that, like 6 to 7 billion, because without taking account of any SPAC or any financing gain or any foundry for builders or any new products, we are still looking for a revenue of 20 billion by the end of this decade. I mean, if they get everything right, of course, it comes with a caveat of that. Now, guys, think about it from this part of view. Either the way the company strategy has chosen, it only has two directions. Either it is going to dominate, or it is going to capture a significant market share, or it will die. There is nothing will happen. I mean, if this company will never stay in the fringes. The whole idea, the way the company is built, is to make a premium product, is to go and dominate out there. Now, if you start think about this, guys, take an x-axis where x-axis the left hand side is the size of the company is very large. On the right hand side, the size of the company is very small. And on the y-axis, what we are taking is the maturity of industry. That means if you take oil and gas, it's a very mature industry. If you take banking, it's a very mature industry. And then as you move up, the maturity of industry is dropping. For example, Lilium, eVTOL company, the industry doesn't exist practically today. So when you take these two axes, then you will see on one corner where you have companies which are very large, organizations which are very large, like DoD has a very large size, very mature. These are the core customers of Palantir. Then on the other side, which is the complete opposite spectrum of this, where we are seeing these small companies, very small teams. I mean, the industries are extremely frontier. They are also becoming the core customer of Palantir. So where is rest of the industry? Rest of the industry is between. So that means everything we talk about what Palantir is not serving today is actually inside these 2 points. So why a company would start going to extreme ends? And there is only one logical explanation for that, is that they want to attack the center, whatever it is, from the both end, because then they can develop a very customer centric, value driven proposition for each kind of client. They are not saying this is a price we are solving you, this is a product you can buy in 50K, then you add these products you can get in 500. They want to ensure that they create value and they capture value. And by making this a strategy that now they are going, earlier I thought, okay, they are going large cap, then they will go to mid cap, then they will go to small cap. But when I started learning about their partnerships in Skywise and Syntropy and later on with these specs, I realized that this is not what they are doing. They are going to attack the market from two very different ends. And if you see, they started with Frontier, now they're going for Foundry for builders. On one hand, they started with large legacy industry, then they went for Palantir Unlock. So they are coming from these two ends. They are expanding their customer reach, and these two ends actually have to meet. That means moving forward, the direction is very clear that will go for mid cap and small cap. The strategy is very clear on this part. So whatever I was talking of the number of this 20 billion, I was trying to take out from air. You can see that this 20 billion doesn't hold here. If the strategy is true, if the market is expanding in terms of data, I mean, the actual revenue should happen quite higher than that. I mean, depending on how you do your modeling, how you risk it. I mean, for my base case, I expect anywhere between 25 to 40 billion revenue from Palantir in the year 2030. I could be absolutely wrong by the time we reach that. A lot of things can go wrong in between, but that's my thesis of investment. So if I take a number of 25 billion and see big data is not going to stop there. Big data is just starting. We are in this journey for 20, 30 years of growth before we start getting petty or we need some quantum computing to push it into a new frontier. We'll still have quite a higher multiples on these companies moving forward. So if I take even 25 billion and if I take a multiple of price to sales of 30 to 40, I mean, I'm still talking a company with a 750 to $1 trillion, overall. Whether it happens, whether we have the interest rate or macro environment to have those kind of multiples, I don't know. But what we have seen with Palantir last year is when there is crisis, this is when it shines best. So if there is no crisis, it will still do well. But if the crisis happen, a lot of companies will struggle. Palantir will struggle less. Most likely, it will shine. Jacob, you want to say something on this one? Hey guys, Dom, Eminem, Dylan, just please unmute and please share your thoughts on it as well.
Yeah, no, I definitely can share. I think you're definitely really helping deliver the education on how the market landscape looks like with Palantir. Their expansion that they're going about with commercial and their new products are only better. What I liked about what Mayhem and Dylan spoke on earlier was the universal application of their products. And as technology pushes society forward in whatever way it is, whether it's space, whether it's big cloud, big data, you have data warehouses, they can make things more efficient and better time to value and operational excellence. And at the end of the day, and I think I posted this a couple of times, and even I think on the YouTube channel, the best or most valuable asset that we have is time as human beings, whether it's time on this earth and our health, and time that we use time to value at work with our families. And anything, we are trying to make the most of those 24 hours we all get. And from a business perspective, that is exactly what Palantir is delivering for now smaller businesses with Foundry for builders. And I like what Mayhem had also talked about with enabling those SPACs to start out as companies using their product at a discounted rate to have a competitive advantage. And you saw it in the investor slide deck that they talked about beating legacy or beating companies that had IT legacy products. And if you start out using this as your core operating system for your business, how fast you can outpace your competition, especially in these emerging markets. So you look at what their application could be for robotics. You look at their application they could be for space. You look at their application they could be at the edge. And you commented on the edge. We know that statistically speaking, conservatively speaking, 50% of all data is going to be at the edge by 2026. And so, imagine what they can do with partnerships with other companies that are going after transform how we do work and how we use data. I would love to see them partner with Cloudflare and figure out more around the edge and IoT. But the universal capabilities of this product and of this company and their mission to be the ultimate software company is really what excites me, and just all these different use cases that everyone's talked about. When you invest in a company that's going to be what you hope to be a $1 trillion market cap company, or the few what we call FANGs of the world that have changed how we do life, you have to imagine other optionality that's not even there today. And if you start really thinking about that, could they play in this space? Could they change this? Do they have the talent to do that and the leadership? And the answer is yes, yes, yes. And so while the market thinks about things in 90-day intervals and yearly stock charts, if you're a long-term investor and you're thinking about what companies are going to change the world, you have to think bigger, you have to be more patient, and you have to hold. And you guys all got me excited. So I'm going to be figuring out how I can consolidate my portfolio to just really have Palantir as my number one holding. And it may not move, like I talk a lot about opportunity costs, and me and Dylan have spoken about this around apps. Digital Turbine's my fifth biggest holding. It's going to move in a 12-month, probably better because of the small market cap, because of the profitability and what the market's seeing and understanding that. But if I'm looking at what I'm going to hold for 25, 30 years, I should just pile it on now because I'm a long-term investor, and I think this is going to be the best stock to hold on to for that long a period of time.
I'd love to run financial metrics to put some things into perspective. I think, like I said, I'm a finance guy, not necessarily an engineer, and I think that's where Em and I, we work together, Em and I, constantly. We're always talking about stuff and bouncing ideas off each other. He's just extraordinarily intelligent when it comes down to the software space and tech. But hey, so if you ran some financial models, based on a conservative estimate of $20 billion in revenue by the end of this decade, by 2030. This is suggesting about a 5x upside, or 4x. Yes, 4x upside, right? So if you did a 30% EBITDA, which they're running right now, and this is assuming that they don't do any share buybacks. This is assuming that, this is base case scenario. You're looking at about a $200 billion market cap. Today, it's about 50 billion. So this is essentially what you're looking at here in the next 10 years, base case scenario. So this is going to suggest, I think it's about 30% returns year over year. But then you start thinking to yourself, they're running about 80%. I think they did 81% or 82% gross margins here this quarter. That's not going to change either. With that 80% gross margin they're talking about, that means that they're going to continue to run highly efficient in a highly profitable business model for the foreseeable future. And what this essentially means is that when they do become profitable, as they stop doing stock-based compensation, you're going to start seeing earnings go through the roof. When earnings go through the roof, companies always do share buybacks because they obviously want to help out all the insiders that own shares, as well as their shareholders who have held on for a long time. So you're suggesting about a 4x opportunity over the next 10 years, when Don was just saying this as well, the risk reward that we're currently facing right now. When you got a company that's projecting 30% growth for the next 5 years, you got to assume that is the base case scenario. Now, if they do that 45 billion, I'm just going to run some numbers here real quick. So if you did that as 45 billion in revenue, well, that's going to end up being about 30% gross margin. So that's $13.5 billion in EBITDA. You multiply that by 30, that's going to be a $400 billion market cap. Today, it's 50 billion, right? So this is suggesting nearly a 10x upside over the next 10 years on an optimistic case. So you got downside, 4x upside, 10x upside. So this is something to also think about with Palantir. Like when you see it fluctuate below $20, and I see some investors say, Dylan, why is it going below $20? It's like, well, because the market's stupid. Sorry, it's just, I see GrowGen sell off today, and I saw apps sell off, and I'm like, oh my gosh, you got a 1 cent miss on EPS, on GAAP EPS for GrowGen, rather than a non-GAAP basis where they actually beat, and then they sell off 20%. Like this is what the market does. The market gets emotional, it's not efficient, but over the long term, you have to assume that revenue growth and earnings growth is going to be what generates long-term shareholder returns. And that is why Palantir is currently about 10% of my total portfolio.
So I wanted to just quickly also mention another thing that Palantir is doing on the edge that's really important is they're pushing Apollo to the edge so they can automate the deployment and updating of all the sort of embedded Foundry that they're going to be pushing out there, which reduces the overhead and reduces the time and the effort involved with deployment. So Apollo is really important. I don't think it gets talked about enough. And I think when you look at it from like an engineering perspective, the really impressive part about Apollo to me is you're taking tasks that would probably take days and weeks in human time, and you're compressing them to hours in automated time a lot across the deployments and the upgrade cycles. And one of the biggest issues that Palantir had during its sales process was telling organizations how many man hours and how much disruption sort of it would take to deploy everything. Now they're talking about just compressing that significantly. And the more sophisticated Apollo becomes, the easier it becomes to deploy Palantir, and the lower overhead it becomes to maintain the Foundry platform and really Gotham as well. So it just becomes more attractive for customers to consider the value proposition, because some of the hesitation was how long deployment would take, how much overhead it would be having to have. For Palantir, it was like, some people were trying to call them a consulting company. Now, obviously, if you look at their margins, it's pretty obvious they're SaaS, but some people were trying to call them a consulting company because they had so many forward deployed engineers. Well, what does Apollo do? It significantly compresses the need, so they can have each engineer working with more sites. They can automate a lot more of these tasks. So, the more and more what you see with what they're doing is they're expanding their capacity, they're expanding their ability to scale, they're getting into a larger total addressable market, and they're doing all of this in a way where they're ramping up their efficiency across the board, right? So having Palantir on the edge, having Apollo be able to automate deployment and maintenance, having a larger use case for the software. The other thing that this is going to do is, what has Palantir done just within the last quarter or two? They've already made Foundry more efficient. They've already made Apollo more efficient. We haven't seen a ton with Gotham, but I'm imagining similar improvements are happening there. But the other thing that this company does is it innovates really quickly. And if you blink, you're going to miss important changes. That's how fast this is happening. And that's also how fast they're expanding their total addressable market. A lot of analysts have missed these cookie crumbs along the way. And that's one reason I was pretty bullish going into these earnings is, you got analysts that are looking at the stock and downgrading it, scratching their head. They don't understand how they're going to expand into the commercial market. They don't understand how the software is going to have a larger a market than it currently does. And yet for us that were watching the company, the writing was on the wall the whole time. You know, how are they going to get into a larger commercial market? Well, they're going to build Palantir for or Foundry for builders, and they're going to get into that larger market by addressing smaller and medium-sized companies, addressing startups, and expanding their service offering. They're also going to make Foundry more modular. So if you don't want the entire pizza, you can get a slice. And then eventually you're probably going to want the whole pizza because you can see how it fits in your digital ecosystem. So I think that one of the things that this company really does well is they kind of communicate to the investors with little cookie crumbs along the way. These are the things we're doing. And then in earnings, they break that all down, and that base case that we have as investors can be validated. And I think especially this earnings, if you were really paying attention to everything that they were doing along the way, it made it pretty clear that we were going to have, in my opinion, a really bullish call. And we did. A lot of that was pretty much all the themes that we've talked about on previous Palantir spaces and in our chat room and in some of the tweets we put out there. I really feel like they're being validated, and this is just a foundation to build upon as this company grows and moves forward.
Yeah, thanks, Eminem. I think that was exciting. You know, one thing which I have not shared much about Palantir, or just in general, another trend I'm extremely bullish about is, see, if we agree for a minute that Palantir package can do a lot more than what its compatriot package can do. So there is another trend which I'm extremely bullish is the low code, no code app utilization. Guys, there is less than 0.3% of world population that knows programming. Okay, a lot more people actually use a computer and tech in a day-to-day, but they don't know the programming exactly. And this is where what happens when people don't know the programming, they use tools where they don't have to program things. For example, if you have to build a website, you will find out Wix or something that can give you a template where you can build a website. Same thing when you apply in an organizational sense. That means somebody wants to build a process management tool, but he cannot program it. So what he will do, he will try to look, okay, whatever system you are using, can I do it in? Sometimes people end up using Excel. Sometimes people use low-code apps for doing this. Sometimes companies actually provide support for low-code apps so that people can do it. Now, if you think you merge these two things together, on one hand, you have a company that is going into a large and legacy organizations where so many processes needs to be codified because this is how people have done it and they don't want to change it. And it can be done without coding in a low code, no code approach. And this product is powerful. That means it's not like your product where you can do things in a low code, no code, but the product is not powerful. That means you can't do much with it. Now we have a powerful product. It is into the right use case scenarios where it can do a lot of things. And it has a low code, no code application. That means now it is trying to access or it's trying to empower a lot of frontline workers who are not able to work. I mean, everybody is not a tech guru among ourselves. People need how to work things. So by doing this and by enabling, I think we have not yet accounted. And to be honest, I don't know even how to account for it. That what is the value of low code, no code app solutions in the Palantir ecosystem. One of the things which Alex said last time was Palantir is not one solution. There are like 500 solutions inbuilt in it. There are a lot of solutions they have inbuilt for their own view of future, which they cannot even demonstrate to client at times that you need to pay for it because it will create value for you for the problems you haven't faced yet. So now think the same concept of low code, no code in the context of frontier industries, which don't exist. That means these industries have to figure out what kind of process management they are going to do, what is the data flow will look like in their own company. That means they need something which they can build and press fast until to reach a point where they can iterate and finalize it. And right from the starting, these companies are built on the foundation of data. They want everything to be accounted for. They want everything to be tracked for. And this is where the same thing in these companies can help building these processes faster and better. I mean, these companies are looking, for example, if Lilium is looking to make eVTOL, they don't care to build some sophisticated process management system. Their idea is, what do we have? Can it meet our need? Can it do it smartly? So I think this aspect of Palantir is actually going to shine more and more as we move forward. And guys, I mean, comment on the consulting company. Guys, I work for a consulting company, the top tier. It's one of the top consulting companies. Palantir was not my competition. Every time we looked at Palantir, we looked at Palantir as a tech company. People in my consulting company who were working in the tech space, they were the one who were the most excited about Palantir. It was always and will always be a tech company. Any definition or anyone discussing that Palantir as a consulting company I disagree with that. I don't even consider it as a tech consulting company, like some of the other companies are doing. For example, like Infosys, Wipro, Accenture. At time they try to use the commodity tech to build bespoke solution. No, Palantir is not doing it. Just investing money in the R&D. They are building products and they are bringing clients along with it. This is where FD is important, because to work with Palantir, you need to change how you work, and the change management is required for it. People in large organizations are not very excited when it comes to change. So you need engineers on the front line at times to actually show that how it is creating value for you. So
No,
it is
you're
a bit.
exactly right, talking. I just had to jump in there because you hit on so many beautiful points. When I work with similar customers in the Fortune 500 and at the C level, change is not always welcome. In fact, it's normally not welcome, especially when IT departments are predicated on what solutions they brought in house to begin with, and their jobs are defined by that and the value that they brought. If they're not able to shift from a paradigm shift for their business and shift on a different thought process and think at a C level, because there are a lot of disconnects from the C level to the IT level of where this is going and what is required. The C level wants solutions that are driving revenue, that are driving business outcomes. And a lot of times there's that disconnect where IT is the break fix and just managing and keeping the business afloat. And all of these different departments are siloed that can use Foundry, whether it's your HR department, whether it's IT, whether it's sales, whether it's media, where we saw the Globo use case on their website with that media company and how they're using it. There's a big disconnect there. So that's why Alex Karp had to fly out and do 25 days out of the month selling this. But now, when you start seeing the use cases and you see the alpha and the ROI that other industries are getting, if they keep marketing this and keep progressing this, other large organizations are going to have to reach out and say, we want this too for our business, because it's creating that alpha and that paradigm shift. But it does take a while to move a big company, and that's why you see the revenues for this company and their net revenue expansion for their current customer base expand, because as they're growing and as they're adopting more and more of this product, it's then providing more alpha and more return on investment.
I think makes
Sorry.
sense, Dom. Dom, we also got I think a couple of new speakers. Let me bring them one by one. Let me first invite Capital Market Nerd, and then we follow it with Apish, Avid, and there's another one with a very small AV. Okay, so Capital Market Nerds, if you can unmute and would like to share your views. Okay, I just think you're still taking time. Apish, you want to go in the meantime before she comes in?
Apish, are you there? We got a couple people on mute.
Okay, I think there's some technical issues. Avid 6, you want to go in the meantime?
Hey, can you guys hear me?
Yes, we can hear you.
Hey, hi guys. Thanks for putting this space together. It's awesome. So one thing that I wanted to say as a software engineer, one of the things that gets me so excited about Palantir is, and it expands a little bit of what Sachin was saying, is that more than providing a no code or low code solution to clients, I think they're providing now, and in the future they're gonna provide a plug and play AI team solution to other companies. And what I mean by that is that I think companies are starting to realize that data is the future, and either now or in the near future they're gonna start using all the data they have and trying to like get as much data as they can. But trying to build an AI team in-house, it's really hard. And not only that, there's not enough AI people around to be able to work at all these companies that are gonna get this data in the future. And I think what Palantir is gonna provide is an AI team that's gonna allow companies to use the data that they're getting and be able to do smart decisions with that data. And it's gonna be way cheaper than building their AI team in-house, and it's just gonna provide them like so much value. and that's one of the things that gets me really excited about Palantir.
And thanks for sharing. I think this is exciting, man. I mean, this is why I always encourage more people to come and share, because with the same, I think this is the view in the investing community, is that everyone with the same data can actually see a different aspect based on their own experience and their own view of the world. Thanks. I really appreciate for you sharing. I think this is really a new angle. I haven't thought it that way. I mean, we knew that their prowess in AI and what they want to achieve, but the way you presented it, that how it can build in plug and play solution moving forward, that can readily help a lot of organizations in day-to-day tasks and actually doing solutions in a way that has not previously imagined. I think this is excellent. Really appreciate, man. Let me just say, Apish, you wanna come? Are you okay now?
He said he was multitasking, so he was still just listening.
Okay. Let me just bring then Abby and Mesh.
What's going on? Yeah, I'm a long listener, first time caller, but I just wanted to come and support Dom. I think he's a big advocate of Palantir and has recently just put out a ton of content that I'm really enjoying. So I just wanted to give props. I didn't know that I was being called here as a speaker, but just a big fan of what you guys are doing here.
Hey, thanks, man. Really appreciate, guys. From the audience, I mean, guys, please raise your hand if you would like to ask some questions, or you want to share your own views about, or if there's anything we have not touched, or you disagree, or I mean, like Evid Six shared a view about his version, that how Palantir can add value, which we have not discussed even in the last such a long discussion. So please, Jessica, you are online. Would you like to share? You're on mute, Jessica.
Hey, I have another quick question, if that's okay.
Yeah, please go ahead.
So again, from the software side, I'm super excited about what Palantir is doing, and like how hard that would be to replicate from another company. But I'm not able to hit it from the financial side as well as many of you guys could analyze the company. I was wondering if there's any, like, what's the bigger bear case for Palantir that you guys know about?
No, I think, I think thanks for asking this question. I think we discussed it, and let me just summarize it. See, there are several risks we see on the company. Okay, let me first cover the internal risk. Is like, for example, the company's own ability to innovate, add new customers. I mean, companies can get complacent. Okay, for example, like today we are seeing 49% growth. Who knows? They could have grown 80%. Probably they have not put enough resources and thinking behind it. That could always a risk we will never know. And some of the other companies actually grow faster. So their own complacency will always be a risk. We would always like to push them harder and do it more. It looks they are hitting all cylinders right on that part. So that is one. The second risk is, which is a real risk, and we all have to face it, is the mainstream media narrative about Palantir. I mean, it is being promoted as black box. It is being promoted as a company uh, by several political group as an with concern. Okay, it has worked with ICE, it has worked with LAPD. It's not a good company to work with. Those kind of narration we disagree, but they are in the market. We have also seen some of very respected investors in, and at least I faced it myself in one of the Twitter Spaces, is coming up and saying outright that Palantir is harnessing data of other companies and actually stealing the data, which is completely against the philosophy at which the company is done. But we have these false informations, or whatever you want to call it, FUD, in the market about Palantir, and it cannot be killed. So that is the second one. And the third one we discuss in terms of bear cases. See, if a company is going to become a monopoly, I mean that means it is going to lock on against some companies, some large companies. It is going to push some companies towards the wall in the corner who will struggle to survive, and they will respond back. And human innovation and human geniusness, and sometimes deep pocket or cash from these companies, they will try to attack the company. They will try to respond it. They will try to build solutions that can overpower it. And these wars are not fair. I mean, like what we are seeing in case of SpaceX and Blue Origin, we see that Blue Origin is lagging behind. They are trying to hit SpaceX in a way which is a move below belt. So yeah, I mean, Palantir will face these kind of situations, and these three are always going to be, in my opinion and our collective opinion, what we have discussed before, some of the bear cases. See, we are discussing a company which has the potential of going to 20 billion, 40 billion revenue a year, but it hasn't reached there. I mean, it is still by the end of this year, it will still be 1.5, 1.6 billion at max. That means we are looking this company to grow revenue almost like 20 to 30 or 40 times. A lot can go wrong. Legislations can change. The relationship with the governments, we have seen that how difficult it is to or how delicate at times it is to manage. So yeah, these risks will stay, and at times they will bring sanctions. At times they will bring negative publicity, as we saw in the case of NHS. I mean, people just sued Palantir because they were not very happy with Palantir accessing the data, healthcare data of UK. But yeah, I mean, these things, no, I'm surprised. I mean, nobody questions Google. I mean, or nobody questions Facebook, how they use the data. And we all know how they do it. But so they are propagating, these funds are going to stay, and they are going to harm the company. They are going to use the resources and attention of companies and investors, and they will harm the stock price in short term, maybe in a long term, maybe forever. I hope that answers the question.
Yeah, that was great, and I agree with you. I think one of the baggage that Palantir has is the fact that they started with Gotham, and it was mainly geared towards like military stuff, like terrorism stuff, and all of that. And that's one of the reasons when I first heard of the company, I was like I didn't even consider that company as a possible company to have in my portfolio. But once they come out with their other products, I realized that it was so much more than that.
I agree. I mean, and some of us probably who will have gray hairs like me will remember some of the twilight years of Cold War era. Before these kind of consumer electronics company, and I would say that two companies, like for example, Atari and Apple. I mean, most of the companies which became great in technology, they're very early. They were working with military and the government. I mean, a lot of these companies we talk about, IBM and all this, they were working with government very early. So in technology space, if a company starts working with government or defense, these are things. They need quality, they need performance. There is no compromise on that part. So there has been a legacy or pedigree of these companies who started in that space, like Palantir, and they became great companies. However, with the advent of Atari and then Apple, up to some extent Microsoft, Facebook, when we got these consumer electronic or consumer facing companies in the tech space coming, this trend was kind of changed, and it has also led to, I mean, overcorrection, where people, like for example, you have seen in the case of Google and Microsoft, where some of the employees in the company decided that we should not work with government at all. Okay, I mean, it's their view. I mean, I disagree with their view, but I mean, I have to honor their view as well. So yeah, I mean, working, if Palantir is treated in this way, I think Alex's view, what Alex says, that this view comes from Silicon Valley, but this view cannot be applicable for the rest of the world. Yes, we honor your view, we respect your views, but we don't agree with it. So yeah, but Silicon Valley is a force to be reckoned with. It's the biggest club in terms of venture capitalists, in terms of tech companies, and yeah, a lot of people comply with it. Let me see if
Yeah, definitely.
yeah, Jessica, would you like to speak? You are already on the podium as speaker.
Hi, I'm mostly here to learn. I'm not, I've been following Palantir for some time and haven't really dived in. I think Mayhem touched on it, but could you speak specifically? One of the criticisms I've heard about Palantir is that commercial revenue really needs to accelerate. Just in general, how are you guys feeling specifically about the commercial side? Because it sounds like the technology really is ahead of all its peers.
So that's a great question, Jessica. And I think that was the foundation of a lot of bear cases going into this quarter, was that, this is basically a government contractor and they should be valued like a government contractor, because that's not only where their concentration of customers and revenue growth is, but that's kind of, they're not seeing the growth in the commercial side. And, just looking at last earnings report, I'd say someone could say, there's some truth to that. But this time around, you had 90% increase in, I think it was commercial revenue year over year, and then 64 new customers come on, if my memory serves correctly, which is a pretty big increase, because I think they had like 147, 150 going into this. So that's really a good sign to me. I think it puts the bear case into much greater question. Now, obviously, for patient bulls, you really want to see that continue quarter over quarter, so it validates that that's an ongoing phenomenon. But the other thing is this is a company that really likes to give investors, constructive ideas as to what they're doing and what we can expect moving forward. And I think they did a good job giving us some cookie crumbs going into this quarter with things like Palantir Foundry for builders and the SPAC acquisitions they made. And they actually had not only their investments, many of them became customers in a lot of diverse industries. So it gives them an opportunity to sign on new customers that are long-term, and it also gives them an opportunity to address new segments or segments where they want to grow their expertise. So I'd say, short-term, the bear case against Palantir not being able to grow commercial revenue and customer base is in great question. But longer term, we still want to see them continue to have that growth trajectory quarter over quarter and year over year.
Can I just echo your sentiment, Ham? With this quarter, we saw, I think Dylan pointed it out, 90% growth in commercial customers, and that's up from the 70, I think it was 78% U.S. commercial growth in last quarter. So there has been two data points there that imply an uptrend, and we don't have to maintain that to vastly improve that revenue from U.S. commercial customers. And what I'd also like to point out is that Foundry is only a couple years old. Compared to Gotham, they really had a lot of time to develop Gotham, and then they used those lessons to begin to work on their Foundry platform. And I think they only finalized that in 2018 when they started to migrate existing customers over to Foundry from their more bespoke solutions. And then they're managing that with Apollo very efficiently, as you mentioned earlier, Mayhem. But when you look at how old Foundry is, it's got a long runway ahead of it, especially when you consider compared to Gotham. Gotham had a much bigger head start. So we're early innings right now.
Yeah, it's like.
Go ahead. Dom, you go first.
I was just going to say it's like Foundry's a startup, right? Everyone wants to say this is a 17.
Can I get 100? Oh, perfect. I couldn't hear anything.
Okay. I was just going to say, everyone likes to say that this is a 17 or 18-year-old business, but the reality is the commercial.
Or is it hard to hear stuff? Because it's coming in and out.
Can you guys hear me?
Yeah, it's good here.
Okay.
I can hear you, Don.
Okay. So people like to say that this is a old business and now it's just coming public, but the reality is the commercial space is literally only a few years old. So this is like a second total business, right? And now they're combining with technologies that interact with Apollo. And you look at what Apollo, I know Mayhem spoke on this as well as Dylan, that Apollo's allowing customers to have their on-prem data update and allow their SaaS business products and everything update as well, and taking that data to the edge. So this is a very new part of the business that will continue to expand. And just to talk about some of the results, if you're new to the spaces that we've been running today, is they had 61% growth, as Mayhem talked about, on their commercial customer base. That's only since December 31st of 2020, right? They added 20 net new customers in Q2 alone, and then they grew 32% quarter over quarter. The fact that they got that much sequential growth on commercial customers is highly encouraging. And then the billings piece on the value booked of contracts was 175% year over year, grown to 925 million overall. So we are going to continue to see this net revenue expansion grow as these commercial customers start utilizing Foundry in different parts of their business and different departments to get alpha. So we should see that exponential growth. This should not look 5 years from now like a traditional SaaS-based company growing at 30% year over year, in my opinion.
No, I agree, Dom. And there are few facts which are not very well known about Palantir is like, Alex has discussed it in pieces also, but like when Palantir started moving towards commercial, there were two things which were very different from a traditional company. Internally, they may be following all the system of Scrum and minimum viable product for development, but they were not pushing uncooked products to the client. Like a lot of companies does, they go for a small problem, they solve it, they improve it, then they start adding things on it. Palantir, in a way, right from the starting, went to boil the ocean, which is not a recommended practice, but it is not recommended because it takes a lot of effort. But if you can put an effort and get value out of it, and that's exactly what Palantir has done. Now, initially, they try to use the same solution that comes from Gotham in the commercial space, and they realize that the requirement is different. What the client is looking is different. And over that time, they actually modeled a solution which eventually came out as Foundry. And until, I think at the end of 2018, they still didn't have a proper sales team. I was talking to one of my classmates who was leading Ringier in one of the sectors in Asia, like several of the few countries in Southeast Asia. And I asked him once, I said, when says that Ringier is a customer, have you used it? Have you? And he said that, yeah, I remember that the guy came and they had this guy, weird German guy. He came and presented. Everybody was so impressed with him. He said, I literally didn't understand much about it, but in the European office, the software is used a lot and people just love it. The software was not implemented in the Asian offices, and this is how the company is actually structured. It's a private company. But yeah, this is telling that how things are different. So in reality, and this is where I'm just sharing my opinion, is I think Palantir was struggling in the space between 2015 to early 2018, that what their commercial offering will look like. They were also struggling that particular time because if you see the market valuation of Palantir between 2015 until DPO, it was actually marked off. It remained stagnant. So now you have this company where people are paid a lot in terms of SBC, and then the value is stagnant. I know that in past, Alex has come very openly and has said, if you don't want to invest in Palantir, go ahead. But he is saying to a particular kind of investor, he is very aware of what is Palantir stock prices. See, guys, if you are offering your employee a stock-based compensation and the stock is not moving up, it's not sustainable, because that means you need to pay more and more stocks. The dilution keep on increasing. It has to become sustainable, and it can only become sustainable if you're creating shareholder value, either in terms of enterprise value or in terms of stock price, because then you have to dilute less. And eventually you assume that company will receive a free cash flow position somewhere in the future where you can do it by share buyback. So if company is based on SBC, in my opinion, Alex is more worried about stock price than any of us. He said in past that, especially in the last interview he had with Parvati, that when they got the company to DPO, he got a monkey off from his back. And guys, if you see, he went for DPO. That means they didn't create any new equity. He knew that company already has significant SBC by that time. And he was carrying this monkey for more than 10 years. At a DPO price of 9.5, a lot of people managed to sell it above 20. From his point of view, 10 years, that kind of wait, and people getting double the value in 3 months, I think he was satisfied. But he understands moving forward, they need to create the value. And you see the call, the kind of earning calls we had. They went all, it was one of the smoothest earning calls I have seen for any company. Barely I have seen these kind of calls, especially for a company which has this kind of a mixed narrative in the market. Can you imagine a company like this, for example, the C3I and Snow have this kind of earning? People will be literally going gaga all the way on CNBC about it. What else you expect a company to do? You said, okay, we are worried about commercial. They said, okay, commercial grew by 28%, 90%, 90% in US. And like I said, the commercial will always grow more in US first because the company has more presence there. As the different companies deploy Palantir outside their US units, and people across the world, for example, Palantir hire more people from different domains, from different countries, it will extend. US will always lead the commercial expansion because still it is one of the top places when it comes for technology adoption. Okay, and most of the world actually follows what companies in US does. So if it is 90% in US, the commercial growth, I think it is the right indication that a lot of companies across the world will follow what is happening in US today. So yes, in overall 17 years company, the commercial growth from that perspective looks bad. Technically, they only managed to get it right in last few years. They only managed to build sales team in last 2 years. And guys, this is a company which actually boiled the ocean. It was not an MVP kind of a Scrum kind of a company which is coming with a product and let's try and test it and iterate it fast. No, they said we want to solve this problem, whatever it takes. It was the right approach. I don't know. It depends on the final journey of this company. They took almost 17 years. In 17 years, we saw from where Facebook has gone from a simple web page and LLC company to become a $1 billion company. So was it okay? I don't know, but I think they were very focused at what problem they're about to solve. And they stayed consistent with it. So from that point, I have a tons of respect for the company and what they are doing. And yeah, I mean, like I said, they took a problem which was a lot of people didn't even imagine it, and they take an approach that was not being consistent with a lot of other companies what they are doing in AI and big data and how they are doing it. So it's a very big bet they have made on themselves. They have spent significant part of their own life, their personal branding. Like for example, you see Peter Thiel also is PayPal and Palantir. You say Alex Karp is Palantir. These their identities are intertwined now with this company. So it's they are very aware what this company does. They are very aware that they will be judged and they will be scrutinized every time in the media, and they know what their investors and their employees are looking into it. So for them, it's probably more important than how we see it from outside. So I'm 100% sure they will do whatever it takes to get everything right if it is not working, to get more customers and deliver best values to client. Back to you guys.
Hello, everyone.
Hey, Stanislav.
Sachin, Marcus at Mayhem, Dominic, Jacob, I believe the four of you, if I'm leaving anybody out, forgive me, were at the last time I was here quite some time ago. And there was a lot of really smart discussion, a lot of awesome hypotheses. And the one thing that we all agreed at is we love Palantir. We love what this company stands for. We love their ethic. And we believed in this company from the time that we seen it because we knew that its potential. I want to say capabilities, but no, what I really wanted to say was potential. And the earnings, I don't know about any of you, but I am so amped. Not even about the fact that I'm making money because I was able to catch it using technical analysis at the low, and some of you probably came in even lower. But the fact that everything we felt about this company has been revealed, and now there's no arguing. The bearish thesis is slowly melting away, and I feel like now we're entering the next phase of where this company is going to be going. I am so amped.
Yeah, no, I couldn't agree more. And we had a wonderful Palantir Spaces hosted by StockTwits a while back, and it got very political. Just to, I guess, comment on that piece of it, though, if anyone's are bears about that piece of it and the politics of what does Palantir do. Palantir gets that data volunteered by their customers. They're not capturing, and they're not Big Brother. And so want to throw that out there for anyone who doesn't fully follow Palantir and do deep dives on it, as well as the ability of what they've helped through natural disasters and crisis with COVID and other things that have happened with different storm recoveries and different pieces around the world. Speaks volumes on what their impact is. And Sakam said it best when he said they respond better than anyone in crisis, and their product shows the most value in crisis and the time to value that they're able to show. So I just wanted to throw that out there because for anyone who just watches the media and watches what news channels say about Palantir, will never get the full truth. Due to the nature of their government business, obviously they do have to keep certain things close to the vest. But overall, what they are trying to deliver for companies in the commercial market is delivering alpha. And what is delivering alpha? Delivering alpha is helping you win and create a better world that we live in ultimately, because your product is speaking for itself and your customers are adopting it. And so they are doing a fine job of that. And I think we'll continue to see that in the commercial market. And eventually Wall Street will have to recognize that.
I also wanted to say that originally I came into the trade because of the hair, and I stayed for the trade because of the product. Gotta admit, our CEO has one of the coolest haircuts.
I second that.
I couldn't agree more.
Yeah, I think anyone who has the mad scientist haircut immediately deserves a premium.
Yeah,
agreed.
Yeah, the guy. I mean, to me, I think it is very important if I invest in a company that it has a leadership that can literally build a cult around it, literally build a movement around it. And I mean, people who know me, they know that I don't invest in a lot of companies, and I invest very large sums in very focused companies. I mean, for example, at this particular time, I mean, I'm invested only in 9 companies, both in equity and pre-IPO included. And yeah, Palantir is one of those positions, and in equity market is my largest positions also. The thing is, like, when I saw, like, I mean, I spent hours listening the leadership of Palantir. I wanted to see, like, one of the things which I wanted to know is that what these guys were saying in 2004, what these guys were saying in 2007, 9. I mean, I saw that their message never changed. I mean, they stay consistent what they are doing and how they want to do it and what kind of value they want to deliver it. They took some of the toughest problem straight away when they started. So yeah, I mean, the tech was not ready. People who were joining them, and I remember I was listening this one of this podcasts, and this guy was an ex-employee in Palantir, and he was saying that one day he was on a walk with Peter Thiel, and he was asking Peter, "We are solving these problems. Nobody has tried it, and we don't have talent." And Peter said, "There is no way we can get this talent if we don't offer good SPC, because these people will go to safer job, and these companies who are giving quite high fact check." So it was very strategic decision they took very early in the companies, and they went with it. So yeah, I mean, it's a very unconventional company from that part. Like, for example, I mean, again, I wouldn't want to draw a parallel, but if you say, like, how Snowflake started. I mean, Snowflake, I mean, the guys and their genius, I mean, they were ex-employees of Oracle, and they see, like, when you are building cloud services and bringing data in, I mean, there is a different price for compute and there's a different price for storage. But the way it is done, I mean, in the elastic storage is that you put compute and the storage together. You cannot scale it fast as you want it to be. So client actually paying extra. Said, if you are going to use the full value of your data, this is not how you are going to do it. This is not fair to the customers. And they were the first company who actually thought of splitting the compute versus the storage. And they did it effectively, that literally everyone in the industry now, be it Azure or be it Google BigQuery or be it AWS Redshift, they have to do it. So they created something. But if you see they solved a problem which was very frontier and everybody needed it, and it created a lot of traction. And of course, I mean, by the time they also reduced the use of data engineers in building data pipelines, they also reduced the complexity in the management of your data warehouses and how it is done. So they created solutions to simplify things for which solutions already existed, but slightly complex one or slightly evolved solutions because of these. But the thing which Palantir tried, solutions never existed. So it's a very unconventional company. So it will make its own path. I mean, like, for example, when Tesla started, I mean, even today, there are people who hate Tesla cars and who hate Tesla stock. There are people who love the cars but hate the stocks, and there are people who love cars and the stocks, and there are people who think, I mean, quite different. So yeah, I mean, it's going to be a very polarized company. It's positive and negative in both ways. Yeah, but it's quite unique, and I really want to be part of this journey and to see, like, where it goes. Of course, I mean, nobody is married to the company. If I see, like, all these milestones we discuss, and for me, like I discussed several times, the biggest milestone is always the revenue per quarter. I want to see this number increasing as much as possible. I want to see some quarters where this number goes as high as 60%, 80%, because companies who become monopoly, they deliver really big daddy quarters. I mean, which is above everybody's expectations. So the recent quarter is pretty good. I mean, it's very good, but still just shy of that kind of big daddy quarter. I mean, I would like to see a 400, 450 quarter by the time we reach to the year end. Yeah, I think that's the idea. If that is not happening, of course, like, we need to see, like, what's going on in company, what's going on in customer preferences. Are customer getting better value from some other vendors or bespoke solutions, or industry trends are changing? So far, it looks on track. We would like it to be better. Back to you guys.
So one thing I think is really interesting about, you guys brought up that basic Foundry is it's a new offering, so it kind of makes that part of Palantir a startup. And I think that's a really interesting way to look at Palantir. It's kind of this hybrid company. It's got its government segment, but it has done a lot to differentiate itself from that. In the government segment, the service sold itself. There's a lot of network effects, and Karp was kind of like the salesman. And Sachin, you touched on the idea that this is very recent that they're even bringing on salespeople and grooming them to be a part of a larger expansion into the commercial space. So I think that's really important, because one of the bear cases that I've heard a lot about is, oh, this company's been around 18 years. You know, what makes it any different now than it was then? And what makes it different is you have Foundry. It's well received. It's a new system, but it's built on a battle hardened. I mean, Gotham is literally used by the military in situations where if systems fail, lives are on the line and people. I mean, that's how trusted the foundation of what they've done is. So, you know, in an enterprise environment where downtime costs money, you know, obviously.
Sorry, I think we lost Mayhem just for a minute, I think. Just give me a minute, guys. I'm just adding him back as a speaker. Dom and Mayhem, just let me know if you could hear me again.
Can you hear me okay?
Yeah, we can hear you now.
Okay, awesome. So in an enterprise environment, you know, where downtime costs money, it's different than a military environment where downtime can cost lives. But you see that same level of cognizance that people don't want to lose productivity, they don't want to lose money, they don't want to have their reputation harmed. So Foundry has that kind of, you know, rock solid foundation, which it's hard to say for some of these other SaaS platforms. I mean, certainly none of them, or very few of them, are battle hardened and tested. And so I think that does help to improve confidence. But the other thing that I think is really interesting about Foundry is this is a system that really we have only scratched the surface of the potential for. I don't think Palantir has found many industries that Foundry doesn't help to accelerate if those industries have large volumes of data that need to be more accessible across things like ERP and CRM and other buckets. And, you know, a lot of these companies are using bespoke solutions, so they're just disparate. They have a lot of trouble putting those pipelines together. And that's what I think is also really interesting for the total addressable market of this company. If you look at their website under the industries they operate, I think there's over 20 that they currently talk about having expertise in. And if you look at what those industries are and how they're relatable to other horizontals or verticals that are similar to them, it really suggests the idea that the only thing is holding Palantir back from expanding into more markets is really just signing up those customers and building the Foundry modules that are specialized for them. So I think that's really interesting to consider, because when you have Foundry for builders, you're kind of forcing that. You know, I think if you notice with the SPACs they took on as investments, that pushes them into other really interesting areas. You know, healthcare is interesting too. They're getting a lot more into research. One of the things they mentioned on the call is they have more companies signing on to use Foundry to improve their analytical capabilities in its biosciences. And I think that's really important, because Foundry, you know, a lot of people think about it, they think energy companies, or they think, you know, big data, or they think airlines, but this is actually getting into areas of healthcare. It's going to get into areas like satellites with their meta constellations. So this is something that I think over time, you know, and this is a concept that that you all were touching on earlier, this is going to probably be an offering, if they keep executing this way and building on the foundation that they have, that you're going to lose competitive advantage if you're not using it. If you're data hungry and you have these different silos of data and they don't talk, and you don't have a way to elegantly get them to talk in-house or with another solution, and there's very few, then you're going to need Foundry. And I think that that's the sort of monopoly idea that Teal and others have kind of touched on too, where they really just the dominant player in that space. There's not a lot of competition that can do all this. There's certain specialized, like C3 AI, you mentioned that, and they kind of focus more on energy and utilities and other things like that, and a little bit in finance. But Palantir Foundry, the expanse of industry offerings that they're getting into is also extremely encouraging, and it's early innings. This is an offering that's only been out several years. So you have to imagine, you know, over time, how that sort of S-curve works. You know, not only do they expand into different segments, small, medium-sized businesses, startups, but they also expand into more industry opportunities as well. And that's another reason that I'm encouraged that they can deliver on some of their promises of growth, because really the limit at this point is going to start to come down to how fast can they execute? How many salespeople can they get out in the field? How many network effects can they capture and monetize? Because we're going to see the ability for them to deploy the platform and get it online shrink from being, you know, it used to be like a year. Now it's months to weeks, and eventually become days to weeks, depending on complexity, especially with where Apollo is going. And that's going to make the friction between, you know, a customer seeing it and liking it and signing up and realizing the benefit much smaller. So there's just a lot of really exciting kind of elements building together that make me, you know, obviously there still are relevant barriers, there still are concerns. We have to be mindful that, you know, we just had a great quarter. It doesn't mean the next quarter is going to be great. So we certainly need to see management continue to prove themselves. But overall, from what I've seen, I'm very encouraged.
And to add to that point, if I may, I don't generally like to get into speculation, and I don't look at the book values of companies. I tend to be a little bit more smooth-brained and read the charts. But with Palantir, for me, it's very different. It's like so much optimism and so much excitement about what they're doing, but it's also because I'm working in that space as a designer, working with developers, understanding the complexity of it. And I'm super excited about the other part is Palantir is slowly buying into other businesses like Quell and so many businesses that we might not even hear of. And they're the one beautiful thing about them is they kept looking 10 years ahead all the time. And was it 10 years or 20 years? I forgot the number that was thrown, but to be a leader, I think that they said they need to be 20 years, I think 20 years ahead of everything.
No, I agree, guys. I think like Eminem has just concluded. I mean, I think it's a pretty strong statement he has made, and I think even I couldn't have said it as good as he has summarized it. I think, guys, as we stay either invested or we're looking to invest more or to size up our position, I think there are few things, few questions you guys all need to ask yourself. I mean, do you like the management of Palantir? I mean, one thing is personal liking. Second is like in terms of performance, are they delivering as they are saying? Like what? So it is very important. Try to listen what Sham and Alex was saying last year, because only then you can judge that what they are doing, is it something they committed it. Because people can come on channels or they can smooth talk you and it will look very smart, but I think being consistent in industry is very important, and if you're listening them on the spot, we cannot judge it. So test it yourself. Are you finding these people consistent in terms of what they are doing? The
And
second is, yes, Stanislav, please go ahead.
no, please continue. There was a pause. I jumped in too fast. I will wait until you finish, and then I'll comment on a comment that you've made previously.
Okay. I think the second is it's important to listen what their customers are saying, but what they are actually saying, like how Palantir helped. And it is also important to see that customers who are praising
Hey guys,
Palantir.
can you hear me?
Yes, we can hear you, man. Just give me a minute and I'll bring you in, man. And that you see that how these companies are actually performing in their own industries. Are they leader in their own industries? Have their performance have gone better in last couple of years or 2 or 3 years? So just somebody comes and say Palantir is very good. Don't take it. Look at those people. Look at their own credibility. Look at their own performance. That how well they are doing it. Third, which is very important to me, is to look around you. That means if there are great companies and if there are great products, over the time they directly, indirectly touch you. Now, Palantir being in the ERP space may take a longer journey to that, but eventually it will happen. So if these three things are happening around you and you are okay with it, then the main question comes is it a good investment for you? I think that question, the answer for that question is I think unique for everyone, given your own position and the other opportunities that are available with you and your risk appetite or what you are looking out of investing. I mean, you cannot just copy what others are doing, but it's good that you ask these questions to yourself. Hey Sam, you can come
Hey,
now.
yeah, thank you. I have a question for everyone. I totally understand Palantir, especially the management is pretty smart. They've been investing into companies like Babylon Health, which is still in a SPAC mode, but they're going to merge. So I totally understand they're really smart investing in other companies. But the question I have is the amount of money they're spending for the sales and marketing. It kind of seems pretty high. Anyone has comment on that, like the amount of money they're spending on the sales and marketing?
So Sam, let me reflect my view is that at least the sales effort they are doing, they are still in the under investment. I would like them to invest more actually on this part. This is again my personal view on that part, and let me tell you the reason for that is, and you were just discussing it few moments earlier, is that they started in sales actually quite later than a lot of their peers in different groups. So they are actually in the state of catch up. The second thing is, apart from the guy they recently had who was like the chief medical officer, they really don't have a lot of domain specialist guy or country specialist guy. So, and the reason for that is like, since they don't have it, they still don't have a dominant position in a lot of commercial sectors. So for example, like 20% mining companies are using Palantir. It hasn't happened. So moving forward, I mean, again, this is my personal view. I would like Palantir to invest more in sales. I would like them to hire more diverse people from different countries and people with extreme domain knowledge and respectful image in the industry. Because when I see Palantir, I always see Palantir that they are leaving money on table. I mean, a company like this and a product like this, I mean, should sell like hotcake. It is not happening. That means why the narrative is not that close to a lot of customers. So sales wise, I would say that they need to work more. Marketing is something, I mean, I always have a different view in how it is to be done in terms of an ERP and B2B domain. But we also saw recently that Palantir has got a lot of negative press because they work with ICE. And so some of the marketing effort, what they have recently done and bringing more awareness about it, I support from that point. I'm not a big fan of spending too much money on marketing, but how it is spent and when it is spent has to be justified. And so far, it looks okay to me. As long as their revenue keep on increasing and as long as they maintain a healthy cash profile, I think I'm okay personally. Let me open it to my peers
Yeah.
as well.
Yeah, Sakin, I would second that, and I would say why it makes sense to increase marketing and S&GA expenses right now is it's a misunderstood company, right? There's still what I'll say is, I won't say slander, but I'll say lies or misunderstanding that it's a black box company and that they're really government only and they can't really impact or growing fast enough in the commercial space. I would say there's nothing farther from the truth. I think what you have to articulate in your marketing is the alpha, is the ROI. Going back to when you're working in enterprise sales, show a CEO that you can return on investment and pay for that expense 2x, 3x, and you have my business. You have my ear, you have my purchase order, and my commitment to work with you collaboratively. That is what they are able to deliver. You've seen it in the Globo case study. You've seen it in the Airbus case study. You've seen it in the Ferrari case study. And so you're going to continue to see that. I think you're going to actually be surprised where you'll see it more in the companies that are literally starting up and trying to be startups and come to market publicly through SPAC, that they are going to provide alpha for robotics, alpha in drug discovery, alpha in space technology. And so if you don't have a core operating system that you're starting with and you're starting with their product and their guidance, now all of a sudden you factor in if they start hiring people who have vertical expertise in this area, whether it's genomics, whether it's in manufacturing. Now all of a sudden you start building out this empire where Alex is trusting more individuals to grow their part of the business and really modulize their business into different segments and provide leadership there in business units. That's when this thing really starts picking up scale and win. So as long as they're getting new customers from marketing and spend, and they're getting new case studies and new alpha and people willing to testify this product is second to none, I think that's where you get the return on investment and it's okay to spend those dollars.
And I just wanted to weigh in and kind of echo what you guys are saying. And just also, I agree with everything that you all both put out there articulately. And it's a really good take. And it's important because this is, again, going back to the theme of what Foundry is. This is a new offering. So, if you look at startups, they have trajectories. You can look at them on J curves. You can look at them on S curves. You can kind of see that there's going to be, some excitement and then some challenges and then more excitement and challenges. And that's kind of just the flow. And if you look at business analysis, SWOT analysis, right? Strengths, weaknesses. One of the weaknesses with Palantir is if you ask people what they do, they don't really understand, right? And so from the perspective of a potential client and as an investor, one of the weaknesses of the company is a lot of people are still trying to wrap their head around what the offer is here and how that's valuable, and maybe even being able to condense it into like a series of different elevator pitches specific to industry. So that's what marketing is really going to do. It's filling that gap so that we have a value prop that a decision maker rather than a technologist can understand, to bridge that gap from where they are now to where they may be interested in previewing the product, going through pre-sales and seeing if it fits into their company's business model. So I think for Palantir, we can't really think of this company as an 18-year-old company, because if we're doing that, we're just looking at Gotham and we're not really understanding the trajectory for Foundry. The government decision-making is a lot different than decision-making for corporations. When you're talking about Gotham, you're talking about Palantir going in and bidding on contracts. They don't really need to market. In fact, they didn't have to have a sales team. They really didn't have to do any of that kind of stuff because they're going in on contracts and they're coming in with a more competitive bid and they're winning on that, and then the virtue of their technology being superior. Well, in the commercial space, it's completely different than that. First, you have to get in front of a decision maker. They don't just put out bids for anyone to bid on in most spaces, right? So how do you do that? Well, you have to build a name. You have to build a brand. You have to have decision makers understand what it is that they're even considering buying. And so Palantir is in the very early stages of making their name a sort of household name, if you will, will, but among corporate decision makers, right? So it's going to be where they watch TV, where they browse the internet, where they read their publications. Palantir is going to get into those areas so that they can really make that value proposition apparent. And I think in the formative years of Foundry, it is critical that they have a almost parabolic growth trajectory for their offer. A, because they want to build that competitive moat because they're very sticky, so it's difficult to get them out, and most customers wouldn't want to when they're generating alpha better than the peers can deliver. But because really, to get that competitive advantage, you have to be within the awareness of customers, right? All these customers know what Microsoft is, they know what Apple is, they know what Google is, they know what Amazon is. Do they know what Palantir is? Do they know what Foundry is? And so that's where we're bridging the gap. So I'm all for an aggressive kind of front-loaded marketing spend that sort of tapers off in time as they realize those results, and that sales become more driven by the network effects of that marketing spend and of more clients coming on and saying, hey, this is really working for us.
Hey, Sam, I just want to also add, if you want to kind of quantify their progress as far as sales and marketing, you can look at their contribution margin or adjusted contribution margin. So they publish that every quarter. You can calculate it as well yourself. And just remember, sales and marketing, that also includes stock-based compensation through all of their OPEX categories as well as their gross margin. But if you take out stock-based compensation and look at their contribution margin, so that's gross revenue or gross income minus sales and marketing divided by total revenue, you can see a pretty steady uptick going back. They've published since Q1 of 2019, and that was 14% contribution margin. So they were spending a lot compared to the revenue that they were getting, but this latest quarter they're at 58%. And as part of their investor day when they were direct listing, they stated that their long-term goal is greater than 70% contribution margin. So you can kind of see their trajectory toward that goal. And if you go back, the only time that it's dipped prior to this quarter and last quarter was in Q4 of 2019. It went from 18% the quarter prior to 15%. But then you can see that they kind of turned off that spigot and then it shot up to 33%. So you can see as they invest in sales and marketing, they do see the dividends from that as soon as they taper off. And that's what we've seen since Q4 of 2020. Contribution margin peaked at 62%, and now it's gone back down, and now it's sitting at 58%. So they are investing a lot, but the question is, how much do you want to invest? And just like Mayhem was saying, once they do become more well-known, it's not going to be quite as necessary to invest the same amount in sales and marketing. You know, they're going to be more of a household name, certainly well-known within industry. But I think it's well worth the money they're spending right now, and as long as they continue the trajectory that they're on, then I think it's worth it.
Thank you guys for all your awesome analysis. I really appreciate that.
Hey, I would like to know, Sandy. Sandy, you are joined as speaker. Would you like to share your views?
Yeah, hi Sachin. Hello everyone. I have been invested in Palantir since I think February. So it's my major holding. I don't want to no, pump or dump or anything about. I just wanted to share my opinion here. As many gentlemen said that Palantir is it's a very good company, but people are getting scared because of all the sellings that happened because of the stock-based compensation and options getting expired. But if you see the fundamentals, I believe on the fundamentals, and I'm a great fan of Peter Thiel, who believes in the disruptive technologies. That is one reason why I'm into this particular company from long time. And the other reason is, if you see the institutional ownership, okay, I have been seeing them from 10%. It is growing slowly, and now the institutional ownership has come up to 19%. So it's as you people all said, it's a growing company, and people have to have patience, and it is around 5 to 10 years if you want to get a big returns on this. That is one thing with respect to patience, and you'll have to hold it very tight and attend all their earnings call and understand if they are going wrong at any point of time. And to me personally, the engineers who work in Palantirs, I have few of them, they are highly paid. The reason behind is they are looking for very, very skilled engineers. The reason behind is because they want their product to be outstanding when compared to other products. So that is one reason. why Palantir is trying to build their team more and more robust. And the other reason, as you people said, they're investing more on sales. The reason behind is the commercial part of the Palantir has not been grown up yet. They are pretty much wide across the government sectors like NHS, and in US also they have a very wide spectrum. So it's good that they are spending money on commercial and sales aspects. And I'm pretty much happy to be part of Palantir. And thanks guys for all of you to having this space and sharing about your opinions on Palantir. Thank you so much.
Hey, thanks, Sandy.
I wanted to get back to the point that Sachin made, which I forgot to mention, and I'm glad Sachin mentioned it, and why I really appreciate Palantir. From the culture perspective and hiring talent, Palantir, right from the get-go, is focusing on bringing the best engineering talent. And as a designer, looking at their designs, clearly bringing a great design talent as well. So whenever they demo their products from a usability, user experience perspective, they got complete focus on that. UX is no longer a thing that needs to be defended to improve the value, and yet not every company is able to get it right. The fact that they're able to understand that they need to build a culture that's focused on design, user experience, and development, and they keep putting money back into that and making sure that they're competing for the best talent is super critical. It might not show up on balance sheets. In fact, it might take away from the balance sheet in terms of the cost perspective. But in long term, this is key for any company if they are to compete in today's day and age. So Sachin mentioned on the culture previously, and I agree, it's huge.
And also do check the LinkedIn job offerings of many top companies. They do add Palantir as an extra knowledge. And it's like other companies are showing interest now, and they're considering Palantir as a great software. So this is one way of backtesting and understanding how Palantir is growing behind the scene.
No, I think this is amazing, guys. Guys, I just want to have a quick time check also because I just want to show that we are 3 hours running now, and I'm pretty sure that a lot of you guys are very close to draining your phone's battery and your earbuds. So why don't we do this? Like in the let me take one final comment from all the speakers, like what they are looking next for the next quarter. I mean, because that will give us some kind of guidance that okay, in these 3 months, if certain things happen, I would stay true to my thesis. Okay, so let me start with myself first, and then I'll just take you through with who's on the podium here now. And guys, I mean, feel free when after if later on if you have questions, you can always direct message and tweets, and we'll respond to that. So in my view, I think what is more important is so I saw that they recently started Foundry for builders. I saw that I mean some of these stack statements. So I'm very keen to see in next quarterly that what is some income from financing activity. It's not that I'm keen like in terms of monetizing it. I just want to understand what is the size of bet we are looking with these kind of companies. Of course, I think to me, quarter three, I think without any compromise, I would like to see the revenue going 400 million. And I would like to see another offering from Palantir reaching to a new set of customers. For example, like they did Palantir Unlock. So before Palantir Unlock came, you would like to use Palantir. But now when Palantir offered itself free, that option was gone. That because if your competition is using Palantir Unlock and accessing Palantir for free, you are at disadvantage. So by that move, Palantir actually took a lot of options from their customers. Whether you want it or you don't want it, it's a different decision frame that has been built. Then they came up with their strategic impact investing in specs. Then they came up with Foundry for builders. They came up with new partnerships with IBM and AWS so that the tools can be deployed on their data packs. So I really want to see at least one or two of these new things coming up. So these are like my top 2 and 3 requirements. Of course, in addition to that, I would love to hear more success stories from clients and how well they have done and potentially from big companies coming in. Let me pass it to my colleagues now. M&M first. Meham, you want to go next?
Sure, thank you. I agree. I definitely want to see more expansion of what their offer is. I'd also like to see them getting into more sectors. I think it's really important that we continue to see them kind of pivoting Foundry both on a modular level and a platform level to be able to offer it as a either add-on or a core offer for as many industries as possible, especially data-intensive industries. So I think that's one thing. The other thing is I really want to see them continue their investments. I think that's a really interesting launch pad, and we've seen similar with other companies. Amazon is obviously a big investor in smaller companies. They invest in a lot of their sellers. They invest startups. They have almost kind of like a venture capital thing going on there. And Palantir is doing a very similar early stage version of that, which is very encouraging, both in terms of their ability to, I think, identify new potential industries where Foundry can be a great fit, but also to be able to appreciate the value of the capital they have. They have $2.3 billion on their balance sheet. So it only makes sense that, if they think these types of investments are accretive both for their core offer and for, the appreciation of that capital, I'd like to see that continue. I'd also like to see more advancement with Foundry in edge offerings. I think we're just scratching the surface potential there, but one thing that would be incredibly encouraging to me, given the scale of the market as it potentially comes online, is using Foundry as a part of, and as that edge offering, as a part of full self-driving. Because I think it's one of the few edge AIs that could really drop in and be very effective. And remember, this thing can fly drones. It can navigate satellites. I think it could handle a car. And so that's a really interesting area to look at Foundry at the edge offer as well moving forward. I don't know if that's going to be next quarter or next year, but that's something I have my eyes on. And I think it's something that we'll probably hear some hints about if it's going to happen before it even happens. They've made a lot of interesting conversations about what their edge AI can do. And if you look at their website under their blog and some of the videos and so forth, they're talking about edge AI a lot more in the last couple of weeks. I put a couple of that in the tweets on my feed as well. So I like that. I also like where Apollo is going. I think Apollo is really important that we continue to see that accelerate the ability to deploy Foundry more rapidly, because it's going to make the sales process easier. So, another thing, even though we don't like hearing about spend, perhaps I actually want to see higher marketing spend next quarter. I think it would be great that Foundry is even more well advertised to potential clients across the spectrum through their social media channels and other digital advertisements, and through more traditional advertisements as well. So I think that overall commercial growth is something we want to continue to see. This is sort of part of the show me story that a lot of Wall Street has right now with Palantir. Obviously share prices are appreciating today, but moving forward, a lot of these analysts are still going to say, look, we want to see stronger commercial growth. We want to see a larger commercial client base with less potential concerns about any concentration, and we want to see more verticals targeted. And I think that that's something that if we see that next quarter, it's going to encourage a lot more institutional investment. So I think, this is a quarter where we're looking back, they're firing on all cylinders and they're doing everything we want them to see. We want to see that continue full speed ahead. And I think if they're able to meet or exceed the forecasts, which I think personally are very conservative, so I'd really be hoping for exceeding those forecasts, then I think the next quarter is gonna be a pretty solid one for us. So overall, Palantir is still, you got to treat Foundry like it's a startup. There could be some fits and starts along the way. There could be some disappointments along the way as well. And so I think, longer term, looking at the company, if we do see some of those, as long as management is able to work their way through that, explain what happened and how they're correcting it, I'm still a long-term investor. Now, obviously, that changes if there's more than one hiccup, or if the actual revenue growth and commercial growth really starts to deteriorate. That makes it a whole different situation. But from where I'm sitting, I'm still very encouraged about this company. And I think if we can see, some of the things I've talked about next quarter, that makes me even more bullish on the thesis.
Hey, thanks, Mayhem. Really excellent summary, man. Hey, Dom, you want to go next?
Yeah. First off, I want to say thank you for everyone who's been here. I don't know if everyone sat through the full 3 hours. We will make sure to get this Twitter recording and post it on all the speakers' YouTube channels and other podcasts and such, so people can listen to it and probably make it in a more digestible manner as far as the timing. So first off, I expect two different pieces that I want to see from Palantir for next quarter and continuing moving forward. From a financial piece, which that's a given, right? We need execution, right? That's what Wall Street's looking at. That's what analysts are looking at. They're looking at their 90-day track record and what their projections are. And it's so funny how everyone changes their price targets all the time. We do want to see more analysts following it. We do want to see more institutional investing happening. They've went from 16% to 19% in a very short amount of time for institutional investing. Also encouraging is that if you look at what their insider purchasing has been in the last two filings since they've had to disclose that, Alex Karp has increased his shares 76%. You always like to see that, right? In his share ownership, and so has Peter Thiel. But from a financial standpoint, I want to see the operational margins continue to grow and show efficiencies using the Apollo product line. I think we will see that. And we do want to see get 400 million, and they totally gave sandbagging numbers for next quarter. So we all expect to see a beat there. So that's the financial side. Really, what more I'm focused on is the long-term trajectory, because I'm a long-term investor on this company, and I want to see continued commercial growth with new sectors, as everyone has said. I want to see more use cases thrown on the website so we can show that they are generating alpha in all these different industries. You see on their website, they talk about how they participate in the AI industry, anti-money laundering, auto racing, data protection, defense, edge, energy, et cetera, et cetera, et cetera. I would like to specifically see some more focus on cybersecurity. Since I work in that world, I think that they could be a big partner. I think they could drive a lot of alpha for a lot of people and a lot of companies out there. I also think that seeing what they've already put on their commercials with helping the energy sector and renewable energies, I think there's a lot of partnerships to be had and joint collaborations when you look at companies like STEM. When you look at the metaverse, I want to see them, partaking in that with NVIDIA and others that are involved in the metaverse. I want to continue to see expanded optionality because I think everyone here on the phone who's wanting to learn about it or follows this stock, we get the optionality and the potential of how universal this software is. So we want to continue to see that they're able to articulate that in an easy to digest manner and make sure they put the marketing dollars and the headcount and sales for that. The last piece I would want to see is expanded partnerships on scale with companies like DataRobot, Accenture, the IBM partnership bearing fruit. Wouldn't mind see closer partnership with AWS or even Google or Microsoft, because all of these businesses with scale and customer bases, if they can get them to be able to tell the story, what that helps is not having to add additional headcount from a sales perspective internally, and they'll have a big reach. So that's what I'm expecting.
Hey, thanks, Dom. I think that's pretty nice, man. I think you summarized it well. Jacob, you want to go next?
Yeah, really agree with everything that Dom and Mayhem have said, especially what Dom said about the DataRobot partnership. That was really interesting, and to be honest, I had expected it to hear something this last couple of months about some new similar partnerships. Things that can really provide synergies for those companies with differentiated product offerings and introducing customers like that retail demand forecast with DataRobot. More partnership announcements with companies like that would be really interesting. The growth in commercial or just total customer count, that 20 new customers, that was impressive for Q2 over 11 from Q1. So I expect significantly more next quarter. If what the C-suite executives is saying is true, then they shouldn't have a problem acquiring those customers. That's certainly proven to be the case for Q2. So customer count, new partnerships, and then as was already mentioned, those margins. I haven't seen quite as many job postings for sales and marketing as there were in Q2. I haven't quantified that exactly, but just from what I've noticed, it seems to have tapered off for the current quarter. So at least a flatlining of contribution margin, if not an uptick in contribution margin, would be good to see for Q3.
And the excellent point, Jacob. I think on the contribution margin, I think I haven't looked up it in detail because I always look for the top line estimate. But I think you're right. I think we need to look in because it gives further insight into the strategy and execution. Thanks for sharing it, man. Hey, Jessica, you wanna say anything for the next quarter? What you'll be looking in?
Sorry, is that for Palantir specifically? What we're looking for in the next quarter?
Yes, Jessica. I mean, anything you have picked up, and since you've been here, you must have some idea. Okay, if certain thing happens in next quarter, then probably I'll see it's a good investment. Unless not, so whatever is in your head. I mean, if you could share a couple of points about it.
Sure. Yeah, this has been a great spaces. I learned a lot. Sorry, I was people are feisty on FinTwit today, so I got lost in the drama a little bit. But no, in terms of Palantir, I am glad to hear everybody's perspective on that commercial revenue accelerating. I guess the only thing that's still on my mind at this point is whether Palantir can maintain its its competitive position in terms of the technology itself. The only other thing that had been a red flag for me is whether or not companies that are still in the private sphere can catch up where Palantir is now. And again, I'm just talking about the technology itself, not not stock price or anything like that.
I think thanks. I think that these are excellent points, Jessica. Let me move to David says you wanna speak something?
Yeah. I guess my final thoughts on Palantir. Well, first of all, thank you guys for putting this space. It was great to hear all you guys' opinion. So my final thoughts is just pretty much drive the point home again, in the sense that I think the biggest upside in Palantir is for them to provide a plug and play solution for AI teams. So future companies that unfortunately realize too late the power of data and the need for an AI team will be able to still manage their data and make the right decisions without having to have an in-house AI team. The other thing that's way more speculative, but I think that in 5 to 7 years, Palantir will be able to do, is that eventually they're gonna maybe not have a freemium type of model, but I think they will come up with a more accessible product for smaller companies that still have data or that are able to leverage other data and they don't have like enough resources for AI as well, but they don't have the need for all the features that, let's say, Foundry provides. I think Palantir will come up with a product for smaller companies and smaller markets.
Hey, thanks, everyone. I think excellent point, man. Hey, guys. First, I would like to thank everyone. Who has joined, and I hope this session has been useful to you. If it creates more thought, please do write to us, and we'll try to share our views on that. I really don't want to look like a buzzkill that we have almost like 95 people in the space, but guys, we've been running for more than 3 hours and 15 minutes. I think a lot of people have their batteries and their earbuds are running low on juice. For me, it's almost about 2 a.m. on Friday morning. I'm in Asia. So yeah, I think it's time that we end. I think, and guys, if we are invested in this company, we're invested for long. We'll be here again sometime whenever there is an event or there's a point for discussion. So feel free to share your points in between. With that, I think I would like to close the spaces and thanks everyone. Stay safe and keep well.
Thank you. Thank you.
Hey,
Thanks.
Bye.
See you, everyone.